What a freaking day. Hello, everybody. Welcome back to another episode of the Market Close. It is Wednesday, August 21st, 3:45 p.m. Today has been an emotional roller coaster of a day. If you were part of the 3-hour market open stream at 10 a.m., we needed a very important number to come out. That number was going to be the Bureau of Labor Statistics revision on the job numbers over the past year. That number did not come out until 10:45, and the market was going up and down based on trying to figure out those results. And then finally, we got the number, and the number was 818,000 jobs down. The market did not care. We jumped up to 562 at the top intraday, up about 0.45%. Then we came back down to 558. Never really went red. We went red for like 20 seconds. Then we went back green. Now, as we clear into the end of the day, you've got the S&P that was pretty much at 560-ish for the past like couple hours. Now back to 559.93. Basically a muted reaction. Nothing too crazy from the S&P. We might close at 560. We're basically right there right now at 559.99. Up about 0.25% on the day. So it's been a pretty crazy day. You would think I say, hey guys, we lost almost 1 million jobs, 818,000. We would get a reaction. No, we did not get a reaction. Rebecca, thank you for the exact timestamp, 3 hours and 45 minutes on the stream. That is correct. So that was at 10 a.m. But the fun doesn't stop there. We had Fed minutes at 2 p.m. And I don't know if you guys have kept up with this. I don't know if you guys saw my tweet on this. But for those that are just joining and are getting their official Fed FOMC minute summary, well, this was the most bullish FOMC minutes you could have asked for. So 3 big points. I'll read the first one last because I think that's the best one. So one is that the Fed believed consumer spending did start to weaken and they could see delinquencies going up. This is likely why some Fed members are getting a bit more bullish, like Goolsby. The second, the Fed believed the labor market is in a better space, but felt payrolls were overstated, which makes sense. We lost 818,000 jobs. The Fed believes that the payrolls were overstated. That's what ended up happening today. And so I guess at least the Fed was not surprised by the basically million jobs that we lost today. And then this is the part that was just like, this was just music to my ears. I could not believe when I heard this because I actually thought it was going to be a little bit more hawkish than this, but it wasn't. Some Fed members supported a rate cut of 25 bips in July. Not in August, not in September, not in November. They wanted to do it in July itself. And that to me is incredible because the way Jay Powell talked about it on the FOMC meeting was basically giving us the idea that it was a unanimous decision that the Fed decided they were not going to cut rates in July. And that it probably was unanimous, but there's obviously debate before you get to a decision. And it seems like based on these minutes, there was a decision or there was a inclination for some of the Fed members to want to cut rates. So I just want to know who wanted to give us a July cut. Was it Goolsby? Was it Kashkari? There's no way it's Kashkari. If it's Kashkari, then we have some issues. Maybe the economy is actually in a bad spot if he wanted to cut in July. Is it Goolsby? Is it like, was it Jay Powell? Like which one? Because I would love to send them a gift card. I would love to just say thank you because it at least seems there is some competence in the Fed that's advocating for, hey, a labor market that's coming down. Maybe we need to slow down a bit in terms of the rate hikes. And they tried to get us that July cut. All of this to say, it seems like it's going to be very likely that we get the cut in September. If they were thinking about doing it in July and they didn't do it because they just didn't have enough support. Now we lost almost 1 million jobs, 818,000. I think it is very difficult for us to not get that cut in July. So the 2 biggest things that everyone was worried about today, including myself, I was super bearish this morning. I thought it would be a 2% down day on the S&P. I thought the market would react very negatively towards what the jobs result that we got. 818,000 jobs, market took it in. It cared, but essentially said it priced it in, and we'll talk more about that in a second. And then the Fed minutes market said, hey, that's pretty bullish if the Fed wanted to cut rates. So not bad. And then on top of that, as we get into the market close, we got Snowflake today after the bell. That's going to be a big one today. We'll talk about that and keep going further there. S&P at 560 right now. Bitcoin's mooning up 3.5%. It's up $2,000 basically in the past hour. Like an hour ago, I think it was closer to like 59,000. Now we're at 61,418. I don't know why this is happening. If anyone knows in the chat any specific headlines, let me know. The only assumption I have is that when those Fed minutes came out, Palantir at 32.38, SoFi recovering a little bit as well, still down about 1% of the day. When the minutes came out, it was very obvious that the market realized that we're going to get a cut in September because some people want to cut in July. Why does Bitcoin like cuts? Because it increases liquidity. By the way, I saw a chart today, Robinhood as well, 2013, Robinhood up about 1.5% of the day. I saw a chart today on the amount of global liquidity that currently exists. There's $6 trillion in the money market funds. Those are trapped in money markets, and I do think that will start coming down. We'll get the number for that tomorrow after the bell. There's currently $80 trillion liquid in the broader global economy. So there is liquidity available. Now, that liquidity is probably not going to come to Bitcoin until we strengthen the amount of liquidity and when borrowing costs come down, because then people will have more of a risk appetite. But there is money out there. And as that money starts to circulate, if you get those rate cuts, probably begins to start making its way into different assets. So not bad. And then if you weren't part of the market open, Target just smashed earnings, beat revenue, beat EPS, raised guidance, and said that the consumer is fine. So today was a good day with a lot of good news. Target started it off, and then the muted reaction to the jobs report was another thing that kept the market afloat. Real quick, the three reasons I had, if you didn't catch the market open, for why the market really didn't care about losing 800,000 jobs. Number one, it didn't push the unemployment rate higher. Number two, it makes a rate cut more likely. Like, I can't believe I didn't think of this argument. You know, I kind of pride myself on thinking of different arguments around this macroeconomic stuff. I did not once say over the past 2 days, as we were waiting for this BLS revision, that, oh, if we lose 1 million jobs, it's going to make rate cuts more likely. Like, I think I implied that, but I didn't explicitly make the connection that, wait a second, if we lose 1 million jobs, why would we not cut rates even further than what we're cutting right now? And it's probably because I had a tainted view of the labor market over determining the ability for rate cuts to resolve that. But still, that's a bullish thing. And then finally, even if we lost jobs, the market has a ton of companies in the retail sector that are growing guidance for Q3, which means they believe the consumer is still going to be okay. So there you go. And that's why the market is doing okay right now. And Bitcoin is catching up with that. I did not expect Bitcoin to go up, but Bitcoin's getting some momentum as well. Did anyone buy the dip today? I told you guys in the morning, I didn't buy the dip yesterday because it wasn't really a dip yesterday, but we were kind of just flat. I was waiting for a real, negative red day today after 2 weeks. And I really didn't get to deploy any capital. I did sell a put on BITX. So I sold a put on that for a $24 strike. The premium on that, I actually sold it when this thing was 27. So that one's already up right now. The premiums on that are pretty good. And, generally I think Bitcoin is above 60,000 by January. But outside of that, nothing else I did in the markets. QQQ up about 0.5%, S&P 500 up about 1/3%. SoFi down about 75 bips, Palantir 32.45, Robinhood again 2013, Nvidia 128, Nvidia up 1%, Tesla up 0.5%, Target still up 11% of the day. PayPal, not the best price action on PayPal. We do not want to see a close below 72.50, but it looks like that's what's going to happen. Hopefully it can hold 71.63 right now. Everything else is green. Snowflake, I'm going to have someone come on the show at 4:05 to help break down Snowflake earnings, but this thing is pumping 2.6% on the day going into the print. Again, I'm bullish on Snowflake because it's down 30% for the year. I kind of think that if they at least somewhat beat expectations, it doesn't go down after being down 19% the past month. So I think Snowflake's okay. I think it'll do well, but the CEO would really have to mess this up to get this stock to go down even further after being down 30% for the year. CrowdStrike at 273. CrowdStrike's now up for the month, which is insane. GameStop up a little bit. McDonald's up a little bit, almost at 290. Palo Alto down 2% after it was up 8% yesterday. And then S&P maybe closes at 561 on the day. Not bad. Not bad at all. Some people bought some more Hood. Some people bought, what do we see? Zoom. Oh, we have Zoom after the bell. I don't know if you bought Zoom, but we have Zoom after the bell. We'll see what happens with Zoom. So I only buy real dips. Dude, I really thought today was going to be a real dip. I thought the S&P would go down 2%. That would cause 7 to 8% declines in most equities. And I don't think it would have been deserved. I just thought the jobs number was going to be so bad, which it was. But the other thing I forgot to mention over the past couple of days is, what if the market priced it in? And today we found out small caps up 1.2%. The market priced it in, dude. The market absolutely, and it makes sense in hindsight, right? If everyone's thinking it's going to be let's look at the S&P chart right here, right? S&P topped out at 562 on the daily, as you can see right there, right when the numbers came out. And then it went down to 557. This is almost identical to what happened on CPI day. Everyone thought it would be 3%, came in at 2.9%, colder than expected. Same thing with jobs report today. Everyone thought it would be 1 million. It came in at 818,000. 2.9 is not that much different from 3, other than psychologically. And S&P looks like it's about to close at 561. Look at that. And there you go. There's 561. And 818,000 is not that far from 1 million. But because it was colder, you get the pump. Then you get the sell-off, but the sell-off is not like 3 or 4% down on the day or even 1% down. It's like 0.04% down. And then you get the dip buyers who come in for that pseudo dip and they take this higher. So it kind of felt like today was a repeat of most days where we get good news and there's a sell-off from that intraday top, but it's not a sell-off to the point where we get a, really nasty decline towards the rest of the day. Wow, Robinhood 2019. Yeah, and then what's helping Robinhood right now is Bitcoin. I mean, Bitcoin just came out of nowhere flying right here. 61,517. Look at that. That's helping Robinhood. Look at it. Look at Rocket Lab, dude. Rocket Lab was down 6% in the beginning of the day. Now at $7, up 5.34%. We've been getting a really nice 3:50 to 4 p.m. every day this week. We start to see a lot more momentum. Tesla here at 223. Oh, some breaking news in the political sector. Looks like RFK is dropping out tomorrow. And RFK dropping out tomorrow will be in Arizona. He'll be at an event. And Trump will also be at an event in Arizona. I don't know if it'll be the same event. And it looks like he's going to endorse Trump. So RFK, this matters from a political perspective and an economic perspective because RFK does have a legion of followers. It probably wouldn't be enough to compete in the general election, but whatever endorsement he gives, I think that will have an impact in the polls. And that might help Trump get a little bit more of a lead outside of the economic policies that has been hurting Kamala over the past couple of days. So we'll see when that comes out tomorrow. That'll be big news. And we'll see who he ends up endorsing as well. What else we have? We have in 4 minutes, we have Snowflake and Zoom. So I guess let's do a quick preview on Snowflake and Zoom. So the street is expecting on Zoom. Let me know if anyone owns Zoom. Zoom has been one of those that, Kathy got everyone thinking it would be an AI leader, but it's just not there. Revenue of 1.15 billion, EPS of 1.21. Zoom grows like 2 to 3% a year. That's why Zoom just doesn't move. Zoom's currently at $60. It's been stuck there for a very long time. I doubt we're going to get any major movement today. So this one has to pay a dividend soon because this one just doesn't move. $60 on the dot. And then on Snowflake, the market wants 850 million in revenue, which would be 26% growth and 16 cents of EPS. The EPS is going to decline by 6 cents. We already know last year, this time they did 22 cents. This quarter, they're going to do 16 cents. So the market's priced that in. But the market's wanting at least 20.5% growth going into next year. Going into next quarter. And I think Snowflake has to go above 20%. They're going to do 26% this quarter. If they don't do 20% next quarter, the stock's probably going to tank. There's an implied volatility of about $12, so about 9%. So it's either going close to 120 or I think closer to 150. We'll see after the bell. But I do think that Snowflake beats on the guidance because I just think they got horribly oversold. Now, granted, the reason they got oversold is because of the data breach, the new CEO, and the biggest reason, which could be the biggest bearish thing that happens on the call today. If they don't have a plan to explain this whole Arctic AI LLM, which I still think makes absolutely no sense, and that hurt their operating margins last quarter because they're spending all this money on GPUs and compute to build this LLM that I still don't understand. Why are they building it? Like, I still don't get it. That could hurt their margins, and maybe the street doesn't like that. Now, granted, if they think that LLM will increase their growth, maybe it's a worthwhile trade, but that's something that we're going to have to look at on the call and see how it ends up playing out. All right, we got 2 minutes, two minutes, and we're going to see what happens. Small caps are pumping, correct. Small caps are pumping as well. Rate cuts are bullish for them. Bitcoin is pumping. Rate cuts are bullish for them. There are a lot of angry people today, dude. Just like as I've observed other accounts in the financial universe and what they're thinking about this. Like they just can't believe how the market's rallying on this. And I think it's pretty simple to come up with a bull thesis, even though we lost 1 million jobs. And a lot of times, as seasoned of a financial analyst that you are, you could be 30 years in the game. You forget the same thing I forgot today, which is that shit sometimes is priced in, bro. Like sometimes like the market just knows it. And if everyone's talking about it, obviously investors, the market is just a group of people that already know something's going to happen. It's hard to get blindsided by something if you're expecting it to happen. So if you're expecting 1 million jobs and you actually only lose 800,000, that's bad. But it's not like you were expecting 200,000 jobs and you got 800,000, which would be 600 to the upside. It's 200,000 to the downside. So I don't know. It seems like the market baked it in and didn't care too much when we got the results. All right. Wednesday, August 21st, 4 p.m. The stock market is now closed. All right, here we go. I don't know if Snowflake goes at 4:05 or 4 o'clock, so let's have our ticker on them and let's see how this plays out. Here we go. Real quick before we get to Snowflake, just looking around the market. Robinhood ends at 2018 up 1.77%. S&P ends at 560 up about 0.35%. BidX had a great day up 7%, 29.55. Netflix a little bit down on the day. IWM up 1.3. SoFi down 0.95. Palantir up. Wow, Palantir ended at 32.54. 0.67. Palantir was at 32.07 on at the lows today. 32.54. PayPal ended 71.46, Amazon 180, Nvidia 128.5. That's great for Nvidia. Tesla 223. And that's pretty much most of the movement we had today. Again, the NASDAQ also green, up about 0.5%, 482 right now. All right, Snowflake. So these are going to be the results that matter the most. Let me actually make a watch list real quick with Snowflake and Zoom. And then let me know what other companies are reporting, because I kind of don't know besides those. I don't know if there's any big ones. Snowflake is up a little bit after hours. So let's put Snowflake here and then Zoom. And then we'll see how the market reacts. And let me know if anyone in the chat owns these names at all. Anyone owns these. Breaking: fast food giant Chick-fil-A plans to start its own streaming platform. Do we have to be in a simulation if that's true? Like, do we have to be in a simulation? Chick-fil-A starting a streaming? There's no way, bro. There's no fucking way. There's just like, this is ridiculous. I mean, what are they going to show like on the streaming platform? Like, what's like, what? That, yeah, can we get an up? Can we put some more details on that in the chat, please? Because that is kind of crazy. Chick-fil-A needs to go public by now, dude. They need to go public. Okay, so no moves on Snowflake yet or Zoom. Let me pull up their IR page. I think Snowflake usually is quick after the bell. I don't think they take too much time, but I could be wrong there. Yeah, nothing yet on Snowflake. And then Zoom, let's check them out. Zoom, again, it's just, they do about $1 billion a quarter, but that's pretty much it. There's nothing. Wow, Zoom second quarter fiscal year 2025 earnings webinar, and then you can click the link and it takes you into a Zoom link. That's actually kind of cool, bro. To get into a Zoom link to hear their PR, like that's actually, I think that's creative. That's cool. Okay, no numbers yet on Zoom or Snowflake. Snowflake's moving up a little bit after hours. We're getting a little bit of movement, up 0.5%. All right, let's do the poll. Let me do the poll. Oh, wait. Can I do the poll? Do I still have time to do? All right, I'm going to do the poll real quick. Snowflake dumper pump. Let me see if I can get that poll in real quick. Oh, never mind. We're already pumping. Never mind. No time for the poll. We're up 1%. Up 1%. We're moving. I don't have numbers yet, though, but it's moving. It is moving. Zoom has strong financials, but I got burned with that before. Yeah, I think Zoom doesn't have a thematic. It doesn't have an AI thematic or it doesn't have a growth thematic. Well, let's put the dumper pump on Snowflake because it includes the earnings call, because we'll listen to the earnings call. So let's see what people think. So let's do Snowflake dumper pump. Let's see. All right, so still muted after hours. Nothing too crazy there. 1% isn't pumping. Yeah. Dude, the thing is about this earnings cycle is like, as soon as we get some movement, we just like, now granted, the earnings has been so lopsided with like Palo Alto fell 6% right before they went up 6%. So you really can't trust it until it comes out officially. Still no update on any of those. We have SNPS Synopsys. Let me know if anyone owns this one after the bell as well. Honestly, dude, I don't know is this a med tech company? $86 billion. I feel like this is, I could be so wrong on this. I haven't looked at this ticker in a while. Synopsys. And then Agilent Technologies. I don't know what the heck that is. Someone in the chat, please tell me what is Agilent Technologies or Agilent. Robinhood 2025 after hours. Not bad. No results yet on Snowflake. Path is up. I was looking at Path the other day, to be honest. Path is up. Yeah, it's up 1.32% of the day. Where's Bitcoin? Wow, Bitcoin's about to go to 62. Bitcoin's trying to go to 62, bro. Holy crap. Let's add Bitcoin onto the watch list just to look at it. Bitcoin right here. Oh my gosh, dude. Zoom just went slightly red after hours, then recovered. Still no numbers yet. Does anyone know why Bitcoin's pumping besides rate cuts? Like, I know the basic argument is rate cuts are good for liquidity. We've talked, but it's up 4%, dude. Like, is there anything else besides that? Because we've known we were getting a rate cut for a while, unless the Fed minutes like confirm that. Does Bitcoin actually care about the Fed? Oh my God, Snowflake's down 8%. Oh my God, it's red. It's red. It's red. Now, is that an overreaction? Is that an overreaction? Is that an overreaction? Wow, that was a red candle quick, bro. That was quick. That was like, you didn't even have time to go down the escalator. That just boom, just went right down. Let me see if I get their numbers. Still don't have their numbers. It's not recovering yet. It's not recovering yet. It's going down more. Oh no, it's going down more. See, Palo Alto by now, Palo Alto was back to green. This looks a little bit more legit, but I don't want to say anything fully yet because this earnings cycle has been up and down. Okay, I'm trying to get the numbers. Still down, still down, still down. No numbers yet. Snowflake IR, nothing on their investor relations. Oh, here we go. We got it. We got it. Revenue beats by 18 million. EPS beats by 2 cents. They beat revenue. They beat EPS by 2 cents. The stock is dumping, down 8% on the day. We are dumping. It beat on the top and the bottom. I guess the guidance has to suck, bro. We got to see the deck. The guidance must be horrendous, or at least not good, if it's going to go down on this snooze. Remember, we're expecting a 20.5% revenue guide if you for Q3. If it's like 19%, that probably is why it's down. It grew 28% this quarter. It looks like 27 to 28%. So almost a 30% quarter. That's not bad. But it looks like the guidance probably got it. Overreaction, maybe. Maybe, dude. Maybe. Like, that's pretty aggressive for a beat in the top and the bottom. Something was said on that earnings immediately that the algorithms are looking at. All right, here we go. I got it. Let's look. Here is Snowflake. Product revenue of $829 million, 30% year-over-year growth. Net revenue retention, 127%. 510 customers paying more than $1 million. 736 Forbes Global 2000 customers. Remaining performance obligations of $5.2 billion, representing 48% year-over-year growth. That is the most impressive to me. That was the most impressive last quarter as well. $2.5 billion stock buyback program. Okay, so they're buying back $2.5 billion of stock and growing 30% year-over-year. Yeah, the top line revenue is 29% at 868. Product revenues at 830. What is bad in this quarter? There's got to be something that's bad. Third quarter. Yeah, dude, third quarter, they're guiding 22%. How is this bad? Why is it down 8%? The street wanted 20% growth. They're guiding 22 for the third quarter. How is that? And full year, they're guiding 26%. Like, it's not amazing, but down 8% on this kind of feels a little weird. CEO said, Snowflake delivered another strong quarter, surpassing the high end of our Q2 product revenue guidance. And as a result, we're raising our product revenue guidance for the year. That's bullish. He's literally saying we're raising our product revenue guidance. Product revenue was up 30% year over year at $829 million, while remaining performance obligations at $5.2 billion were up 48% year over year. The quarter was hallmarked by innovation and product delivery and great traction in the early stages of our new AI products. Okay, I don't believe them about innovation and product delivery, but we'll see what they have to say on the call. With the combination of our platform, the network effect of our collaboration, and our AI innovators, we have a huge opportunity ahead to deliver even greater value to our customers. Stock's down. You know what's happening? The market does not believe that Snowflake is an AI play. I think that's what's happening. It's recovering a little bit right now, but if you're not going to go up on those earnings, and maybe that changes after the call, but the market has some serious trust issues with Snowflake in regards to AI. Zoom is up 4%. Let me see if I can pull up Zoom numbers. Zoom is up 4%. Zoom, okay, Zoom beat on EPS by 17 cents, 139 versus 122. They beat on revenue by a small amount, 1.15 billion versus 1.16. So a very small amount on revenue, a decent amount on EPS. Stock's up 4%. Not a big mover, but it is up. Snowflake still down 5%. Okay, so it was down 8%. Now it's down 5%, recovering a little bit. That is confusing, dude. I mean, look, I'm not a big fan of Snowflake, but I didn't expect them to go down on that. I also expected them to raise guidance because the expectations were so low. And it seems like they followed through on that, but market doesn't care. Where's Robinhood? You guys are saying Robinhood's pumping? What do you mean? Where's Robinhood? Whoa, Robinhood up 1% after hours. What is that about? I did see someone bought like $3 million of Robinhood after hours in the order flow. So there was a big order yesterday. I don't know why Hood's pumping. The only reason is Bitcoin, I would imagine. I don't think there's any news or anything out. Where's Palantir after Snowflake? Let me see. Palantir's down a little bit. Is down a little bit. Man, a lot of investors just might not trust Snowflake, dude. No matter what growth they're seeing, I don't think they think it's sustainable, and there's not a real big AI narrative to it. Synopsys is green a little bit. Agilent Technology is up 2.8%. Zoom is now up 2.7%. Snowflake down 5.6% on the day. And we are red, catching a little bit of a bid right there. You see that green candle. It's getting up there. Urban Outfitters is out. Yeah, I forgot they had earnings today, but Urban Outfitters, I don't know if you guys knew this was public. I didn't until today. URBN. I don't think I've shopped here for like 15 years, to be honest, but it is a big retailer. Market expected $1 of EPS. They brought in $1.24. Market expected $1.34 billion in revenue. They brought in $1.352. So they beat on the top and bottom. Urban Outfitters is a retailer. So I'm going to look through their transcript tonight and we'll see what they say about the consumer. Snowflake recovering a little bit now, only down 4.5%. But that's good. If people and Target also said, hey, apparel grew in their Q2. No one thought apparel would grow, but apparel actually grew. I think it was up like 3% at Target. So people are shopping for clothes. And it makes sense that Urban Outfitters is getting a little bit of momentum. Okay. Let's see if we can get some more clarity on Snowflake. I have a friend who's joining in a little bit, and he'll break down Snowflake. He has a very big position in Snowflake, so he'll break that down a little bit more. But let's get an update on some of these numbers right here. Okay, so here is Snowflake. Here we go.
For Snowflake, 18 cents adjusted EPS, 2-cent beat there. Revenues also a beat here, 869 million, better than the 851 million that analysts were looking for. The company's CEO said in a statement the quarter was hallmarked by innovation and product delivery and great traction with the early stages of our new AI products. With the combination of our platform, the network effect of collaboration, and our AI innovations, we've got a huge opportunity ahead to deliver even greater value to our customers. And also, they wound up raising their product revenue guidance for the full year, but you can see the stock is lower just over 7% in the after hours. Back over to you.
Interesting. Okay, Kate, thanks. Now, don't miss Jim Cramer's exclusive interview with Snowflake CEO. That's coming up at 6 p.m. on Mad Money. Barb, what do you do with this? The top line numbers look okay on the quarter, and raising product revenue guidance would be a good thing, but this stock is dropping.
Yeah, which is actually surprising because I think a lot of investors, there are a lot of questions out there, and they had their own security incident. How much was that affecting? The fact that they beat on both, at the top line and EPS, the feeling was that they did that, and if they guide higher, for the second half, that could really get the stock going, because the stock is down, I think, 33% year to date, and so obviously, down a bit more. So the thought was that they really discounting a lot of the issues. So it'll be quite interesting and enlightening to see what management says on the call.
Okay, we'll be watching that, of course. Let's see. Are we keeping folks around?
Okay, so that's Snowflake. Let's get some other companies here. Let's do Zoom.
So another beat on the top and bottom lines here for Zoom. $1.39 adjusted EPS, higher than the $1.21 that analysts were looking for. Revenues also beat $1.16 billion, higher than the $1.15 billion the street was looking for. The stock up about 2.5% here. Now, it also says it sees Q3 revenues in a range of $1.16 billion and $1.165 billion. That's better than the $1.15 billion. Estimated EPS also $1.29 to $1.31. That is higher than the $1.24 estimated by analysts. And finally, full year revenues also a better than expected range here, $4.63 billion to $4.64 billion, higher than the $4.62 billion that analysts are looking for. And EPS also better than expected range here for the full year, $5.29 to $5.32, better than the $5.05 that the street is looking for. Back over to you.
All right, that raise the street seems to like in overtime, up 3%. Kate, thanks. Now let's take a break.
Okay, so Snowflake is still dumping. Someone says, why do you think it dumped? Because the numbers were good. Look, I'm trying to figure that out as well, but I honestly, and obviously I'm a bit biased here, I think the street just wants Palantir, dude. I legit think the street feels there is not a narrative of growth that they can get behind when it comes to the long-term potential of Snowflake. Raising the guidance was good and beating the top line numbers were good. But I don't know. I don't think there's this like jolt of energy that their earnings is showing in the numbers or in what the CEO is saying about how they're going to take, like when Karp says we'll take the whole market, some people can think he's being a showman. But at the end of the day, you want a CEO who's really fucking confident, right? Who's really just like gung-ho about capturing, the entire enterprise AI landscape. And I didn't get that from what we read on the Snowflake earnings. Maybe the market just is not feeling, maybe the market wants clarity on AI. They want clarity on this LLM. They want clarity on what the go-to-market is. Snowflake is kind of bloated, 7,000 employees, 40% of revenue, stock-based compensation. Like, I can give you every bear case in the world. I just thought it was already down 35%. Like, it has nowhere to go but up a little bit. And that seems to not be the case. Down about 5% right now. Right here. Is there a level limit where you would buy Snow tomorrow? No, I wouldn't buy Snowflake because I just don't believe in it. But like, I think TJ, we sold 5 puts on it at like 118. So like trading it is fine. That's not a big deal. And trying to get some premium off it, especially because I think it's oversold. I personally would never own it. Like I just don't see any go-to-market product vision on this company. But I think wheeling it is fine. Like I think going for 118 or 115 on a put strike is not horrible. Because if you have to own it at 115 or 118 or 120, like I don't hate that, right? I don't think it's a bankrupt company. I mean, they're doing almost $1 billion of revenue a quarter, right? Like it's not a horrible company. It's just, it's placed in a sector that cares about AI. And out of all the SaaS companies, there's only a couple, Adobe, Palantir, Salesforce, that are even really attempting to do something meaningful in AI. And Palantir is the one that's getting the best premium because they're actually executing when it comes to AI. But yeah, there's not a price where I would get excited to actually like buy stock outright. Zoom at $60, it's at 3%. Snowflake down 5%. Put premiums might be good tomorrow as well on Snowflake. Like, do I see it going below sub 100? No. So if you sell a $100 put, I don't think that's the worst thing. Urban Outfitters down 2%. Bitcoin 61.5. Synopsys up about 1%, and then Agilent up about 2.7%. Snowflake still down 5.4%. Maybe it's doing that so many IPOs do drop 90% from their highs before bottoming. This puts Snowflake at around 40 to 50. I personally will start to DCA if it drops into the 70s. Okay, well, I mean, dude, I don't think it can go below sub 100, but if it gets like 50, 60, 70, yeah, I do think even if you hate it, at that point, it becomes relatively cheap. But you have to ask yourself, why did it get that low, right? Did it really mess up the whole AI narrative to the point where the market's tanking it below 100, or is growth slowing down? As far as we can see, let me try to pull up the deck. The growth is slowing down, but it's not slowing down as aggressively as the market expected. So then it's just a question of what's wrong with the narrative itself. Let me see if I can pull up the deck. I think, no, they didn't post the deck yet. Financials, quarterly results. Is this it? Infographic. Yeah, this is it here. Well, no, this is just one slide. Oh, presentation. All right, here we go. Investor presentation. Okay, here we go. So here is the presentation. This is all fancy stuff. Okay, so they believe their TAM is growing from 152 billion to 342 billion. Financial highlights, 30% product growth. We saw that, 127% net revenue retention, 510 $1 million customers, product gross margin, 76%. Palantir's, I think, is at 80%, if I'm not wrong on that. 38% year-over-year growth, annual product revenue, 30% quarterly revenue growth. Again, analysts thought this would be 26%, so they're at 30%. Palantir's still trying to get to 30%. Palantir's at 27%. Remaining performance obligations. This is the one I like the most. This, I think, is growing just incredibly well, and that shows that they have a big backlog of revenue coming in. Do they have gross margins here? Not gross margins. Do they have anything around AI? So headcount, wow, 7,630 people. That is a lot of people. And you can see a bulk of those, dude. The most of those are in sales. 3,200 are in sales and marketing. I don't even think Palantir has like 5 people working in sales and marketing. I'm being hyperbolic here, but still. So you got a lot of employees. Revenue mix by geography, United States and Canada still taking up most of it. All right, I guess on the call, we're going to hear more questions about their Arctic LLM and what's going on from there. Let's get a friend of the channel. He was on a couple weeks ago, Sam, who has a pretty big position in Snowflake, and his thoughts on earnings. Sam, what's up?
What's going on, man? How you doing?
I'm doing good. Why is your stock down 5% after beating on the top and the bottom line?
I like how you say my stock, and you said big position. It's like I'm all about risk management. This is only 4% of my portfolio, but why is it down? I got to be honest. I'm trying to find exactly what it is. Like their product growth for the guidance for fiscal year 2025 came in at 3.356 billion, and last quarter they guided for the same year 3.3 billion. So they increased the guidance of product revenue, which is good. So that went from a 24% guide to a 26% guide.
Did
To
the
be honest,
did the street expect something higher on that? Is that the
no,
reason?
I mean, I'm really going by the estimate. Like the estimates are really everywhere, but they did beat the bottom and the top line. They beat bottom line by 2 cents and top line by revenue by about $18 million. Just chump change, 18 million. Chris Patel got skinnier. Yeah, I know, man. Chris Patel did get skinnier. Yeah.
Okay,
One
they,
eight.
they grew top line by 30%. So what do you think? Like, what is the street upset about?
Probably they weren't blown away. Pretty high expectations still. To be honest, it was trading at like about 10.6 times EV/NTM revenue, which is a good metric to basically evaluate a lot of cloud stocks. And now after hours, what are they at after hours? Still at like 126. They're at about 9.8 times, which isn't like, it's not cheap, but it's not as expensive as they are historically.
Okay,
Then
but
again,
isn't
yeah.
Palantir's number on that stat like 20 or some crazy?
Yo, dude, Palantir is expensive as hell, but when you got a little Indian dude on YouTube pumping the thing every single day in the morning and at night, the thing is going to get a premium. But to be honest,
but the reason I'm bringing this up is because you said Snowflake's number is like 9 or 10 on that metric. Palantir, I think, is like 20. What is the disconnect? Not asking you to explain it in the context of Palantir, but they are growing. And they aren't necessarily stopping the growth, even if it's slowing down from like 3 years ago. So the market expected 26%. They bring in 30%. Like, what did they need to say? Or what do you think they need to say to get the market to believe there is momentum here?
So Palantir is growing at, what was last quarter? What did they come in at? About 30? Was it 30%?
27.
27%. Okay. And then they got it for like 25% or something. They are GAAP profitable. Okay. I mean, the balance sheet, is good for both companies, to be completely honest. But Palantir is GAAP profitable. So you're going to get a lot of institutional investments going on, right? Like a lot of hedge funds and a lot of funds managers, they can't invest in the Snowflake because it's not profitable on a GAAP basis.
I didn't know that.
So yeah, no, they're not, but that's because most cloud stocks are not. Like if you really think of the cream of the crop when it comes to cloud stocks, honestly, Palantir is really up there. Their gross margin, not the gross margins, their net margins are really good. Snowflake is in the negatives on a GAAP basis, but at the same time, they're not very competitive products. But I don't know if you really want to think that people are leaving Snow and then investing to Palantir, then that's cool. You can go ahead and think that. I think the market is big enough for both of them. Palantir has a bit different use cases from Snowflake, but what they are competitive with is Databricks, to be honest, and that's in the private markets. And honestly, in the private markets, there's like so much liquidity there. Like Databricks doesn't even have to go public. But anyways, going back to Snowflake.
Let me ask you this question. Yeah. What is the use case of Snowflake?
Okay, so for one thing, Snowflake has been around for quite some time. They're pretty much a cloud native. Well, not a really cloud native product. They used to have an on-prem one, but they're mostly a cloud native product. And the thing is that the old model of data analytics was like Tableau. And a lot of those on-prem tools required like data scientists to be on site and high pay. You got to pay these data scientists a lot of money and then host everything on-prem. Snowflake was like the first one to come over and be like, well, you can host this in the cloud. At the time it was AWS. And then it's not really as much as maintaining it on-prem. So they did gain a lot of those customers. The thing is that a lot of the street is scared because the expectation was, okay, with the AI movement, they gave it a very hefty valuation. And then now they're normalizing their valuation. But the thing is,
hold on.
Yeah,
what does a company buy Snowflake for?
People buy it for data analytics to store in the cloud.
So it's so you're telling me it's storage space.
Well, yeah. They put all of their data and whatever BI applications they have, BI processes, they used to push them into the cloud, and then they would basically give users the way to automate or scale any graphics or tables, whatever it is. The question
is then, if the market wants AI and use cases to like transform an entire company, do you think Snowflake offers any of that? And that's why the market's not getting excited about them if they're just storing your data?
Yeah, I think they do, but it's not a hot, booming stock in the stock market right now, right? Like if you really think about the stock market right now, they're very selective in what they're picking. They're looking for profitable companies to invest into the future and that are having increasing top line growth rates. Snowflake is not providing that right now. And I don't expect them to. They've said this in Investor Day, and they've said this in the last few quarters. We're focusing on innovation and the profit that we will not sacrifice product revenue to get there, but we will sacrifice margins. And they have guided for that plenty of times. What people are probably coming into here is expecting like Snowflake's going to turn the ship around, but that doesn't really happen in this type of market. It's a very competitive, cutthroat market when you think of data analytics in the cloud.
Do you think they actually have a moat? Because you're describing data storage to me, and that just like I'm not the biggest data guy.
Not data storage. Okay, so when you think of a moat, you're thinking of the stickiness of the product, right? How much does it cost to switch from Snowflake to, I don't know, Databricks? It's very expensive because then you'll have your data that's already hosted in Snowflake. And yes, people can store their information and data outside of Snowflake and still process analytics and whatever the coding is that they have in a Snowpark to data that's outside of Snowflake. But at the same time, it still is very expensive to change all the processing and the back end of different applications that do rely on Snowflake and all the training you've done and departments you've built based on Snowflake. It's not easy to just be like, oh, well, I'm just going to take my workloads off here and just put it in Databricks or even like Palantir for that matter.
Right. Okay. So let me ask you another question. This Arctic LLM thing, what is the point of doing this? And do you think that'll accelerate the AI narrative around this?
Okay. So Cortex AI was a very big thing that they hired Sridhar for, the new CEO. Yeah. And he's putting a lot of money into it. In their investor day, they showed a lot of products that are going to be going GA soon. But the thing is that they're still in development. They're still in preview. And they are going to roll those out into the market. So you're not going to see the massive adoption that you'd usually see in a product that's already in the market versus a product that's still in preview. So do I expect Snowflake to come around and turn around the ship this year? Maybe, but do I expect that to happen early next year? Probably. That's when things really pick up. But to be honest, most of the software stocks are not really showing the returns that investors really predicted in the beginning of 2024 and late 2023, which is the reason why you saw their multiples compress.
Do you think the Arctic LLM will be a default LLM and it'll be better than like GPT for the enterprise? Do you think that's the idea there?
Okay, so the difference between GPT and Cortex AI, which is Snowflake's AI model, they also have a Copilot engine as well, which is part of that product suite. But when you think of GPT, that is a public LLM. So when you send data to be processed by ChatGPT, you're sending your data into the internet and to ChatGPT to process and then come back with the results, right? So that is known as RAG, or retrieval augmented generation. My bad. Oh, wow. Look at you, man. You're an AI engineer. But for the most part, when you have Snowflake, when you have Cortex AI, that is privately in your organization within your cloud. It is cloud independent. So if you have all your infrastructure in AWS, all your RDS instances in AWS, you can host the Cortex AI within your entire VPC. So it never has to leave your company's gates and therefore doesn't come into the potential of packet sniffing, whatever it is. And it's basically mostly security. It's for security purposes. And plus it's built within their processing. So let's say you host your data at Snowflake and then you run all the analytics on it using Snowflake's engine. They don't charge you for the egress costs, basically the cost to export data outside of that platform. So it saves a lot of money there.
Okay. Another question here.
Go for it.
Why does the company have 7,630 employees with more than half of them working in sales and marketing? Do you think at all this is a red flag?
No, man. It's all about selling as many products as you can in the most strategic manner. That's how every single cloud product and cloud software goes. Even Palantir, like their go-to market staff, a lot of the cloud companies, they really shrunk them down because, like, when you really think about it, it's pretty liquid. Your go-to market team, you can just cut people, hire new people. The onboarding isn't really as crazy as like onboarding an engineer, which they tend to be a little more sticky. So yeah, I would expect them to beef that up so then that way they can sell more of their products. That's kind of expected. Even though Palantir, I know you're saying they did decrease the staff and they are still able to execute. Well, it's a completely different company. It's a different niche.
No, I agree. I am blown away by Palantir's go-to-market in terms of boot camps. And I think that has revolutionized how to sell SaaS. I think it's every other way to sell SaaS is subpar than letting people actually use the product. So when you have 3,500 people that are built for selling, and I know it's a different type of way of selling, different type of product, it does make me feel there is a little bit of bloated cost there. And if Palantir offers to a client a boot camp versus, a dinner that Snowflake salesperson would offer, that could be taking away market share for them, at least a little bit.
It can be. However, the TAM is expected to grow 2 times since 2023 into 2028.
Agreed.
So there's enough food for everyone to eat per se, right? If you think of like AWS versus the other hyperscalers, Microsoft, GCP, like only 10% of infrastructure is penetrated into the cloud, meaning that there's 90% and that's still growing, right? So like there's plenty of food to go around, guys.
Right. All right, let's see what they say on the call, man.
Yeah,
We're going to listen to the call at 5 p.m., guys. So whoever wants to stay on, we'll listen to it and we'll see what they have to say. In terms of the market today, give me your thoughts, man. We had 818,000 jobs go away. Market goes up. Fed minutes come out. Market goes up. What's going on in the markets, Steve?
Dude, man, priced in. It was already priced in. Didn't matter. Unless that number came in wild. Like, because, we already expected.
I mean, 818,000 was pretty wild, though.
Yeah, I know, but they already said $1 million, or Zero Hedge already said $1 million. It's already priced in, right? So, and that's just now. The market is forward looking. Like, they don't care about past data; they care about new data, right? So, who cares? And to be completely honest, like the rate cuts are still coming. They know it's coming. We kind of got affirmation today during the FOMC meetings that it is coming. In fact, like you're saying, there are people who are saying we should have cut in July. Unfortunately, they didn't, but that just leaves room for a higher percentage of 2 rate cuts instead of 1.
Right. Real quick, again, on Snowflake, before we go back to the Fed, what price would you get excited to buy this one? I mean, it's at 125. Is there a buy zone that you like?
I mean, I get really excited if I was at 185, and I did get excited, and I bought it at 185.
Okay, well,
it is what it is. Like like that's the whole point of position sizing, right? Like if I went full port in Snowflake, I'd be down about 50% year to date. Right. But I'm not.
Do you like 118? Yeah. Do you like that price? TJ sold some puts there.
Listen, I don't have a $6.5 million account where I can sell puts at 118. I can't.
But in general, what price do you think this is a fair price to pay for the company?
Fair price to pay. So right now we're at about 9.6 EV and TM. I believe they're above a rule of 40, which is still good, but that's on a non-GAAP basis. But I would say even now is good. It really depends on how long your holding term is, right? If you're bullish this company for the really long term, you will win buying it at it today, unless you truly believe that Snowflake's going to go out of business or have stagnant growth for the next 10 years, right? Can you beat the S&P 500 8% per year? Because if you can, you're beating 90% of the fund managers out there.
Okay, so you like it 120 and below. Basically, that's your...
Yeah, I like it right here. I like it at 120 below to buy shares. Do I like it for near-term call options? I mean, well, if you bought them before the market closed, then...
Wait, what strike? What strike did you buy? What strike?
Well, I have like 130 call that expires in October. So
okay, all right.
And that was more of a macro play for the rates. As rates fall down, rates do end up. The bond market tends to front run the Fed when they first cut rates, and they have.
Right.
The 10-year is down like 50 basis points since like this whole came in there. So like I would have expected Snow to make a run, but I didn't buy that call until like I think last week. So it's pretty flat. It was a day after Warren Buffett said he sold, or we got the 13F that he sold. I was like, okay, that kind of marks the bottom right now. But at the same time, we'll see how it goes. Like it's a calculated risk. If it goes to zero, it goes to zero, but I'm not going to hold until October.
The 10-year and the 2-year are a little close to uninverting. 2 years at 3.9, 10 years at 3.7. So the gap is starting to narrow.
Yeah, we're at minus 13.4 basis points, and we've been steepening since those minutes today. Actually, we steepened about 25% today. It's pretty crazy. We were coming off of 100 basis points of inversion, and then we rapidly steepened like about 70 basis points in a matter of a couple of weeks. People were scared. Does that mean the recession's coming up because of all the indicators, whatever? It's like you want to run around with your head off saying, I'm going to time the market because I know a recession's coming. Then that is a loser's game, man. That is a loser's game to time the market.
Do you think the end of the year is relatively bullish, or you think we're flat, or you think we have a recession?
I think we're going to be bullish. I don't think there's going to be a recession. I think that if there is a recession, which the data today isn't even showing, like employment is still strong, right? It's just normalizing. It's not spiking up. But I think if we do have a recession, it's going to be very shallow because, dude, like every company's prepared for it.
Any thoughts on Buffett dumping Snow?
He's not a software guy.
Yeah, but
He
why did he
mostly
buy it in
invests
the
in
first
value
place
stock.
then? Why did he?
I don't know. Maybe like some dude whispered into his ear and he's like, okay, maybe this is a good idea. Let me put like 0.05% of the entire company in this one here. And then he cut his losses to like pretty much flat. So still good. Do I think it's a big deal? Not really. If he did buy more Snowflake, now that would be a big deal. But I don't know. What's that saying everyone says? Like there's a million reasons to sell, but there's only one reason to buy.
Yeah. And see, these Snowflake numbers are actually kind of impressive to me because they had a data breach in this quarter that was pretty bad. It wasn't as bad as CrowdStrike.
Yeah.
Any thoughts on that?
So that data breach wasn't necessarily their fault, right? They've always recommended two-factor authentication for all their users. Excuse me. Yeah. So basically, you know, what two-factor authentication is. You type in your credentials, you log in, you look at yourself for the password, you got the Google Authenticator, you put it in there, done. Right?
You mean the thing that annoys everybody? Yes, we know.
It annoys you, but I work in IT, dude. I love that stuff. Like you better use two-factor. All right. But to be honest, like some companies didn't have that on, then someone got in. And for the most part, like the one thing that's very hard to protect organizations against is social engineering. Like if someone comes up to you and you're like someone who's not really tech savvy and you have this person come up to you who's like very nice, charismatic person, it's like you might have, I don't know, Darlene give their password to this person who says they're in IT and log in for you, whatever, like boom, the person's in.
Why Darlene? Has a Darlene hurt you before? Why her name?
I mean, I used to work in help desk, dude.
Oh, so there was a name named Darlene. Okay.
There was someone named Darlene where like she wasn't too tech savvy and I had to help her a lot. But for the most part, I mean, you know, it's just all those C-suite people, like they don't even know how to use their phone most of the time, dude.
Okay, so you don't think the data breach, because obviously revenue wasn't affected by that. It seems like
it wasn't. It's still one up. I mean, you know, the thing is that when I was putting numbers in, that's why I came on a little bit late. But so basically they came in at about 28.9% total revenue year over year. Product revenue came in at 29.5%. So last quarter they came in at about 33%. So there's a possibility that the street might be looking at it, be like, the growth's slowing down, you know, sell. Those are most of the algos probably. But at the same time, you know, shrinking revenue growth is not really the best thing to look on your balance sheet. However, one thing to keep in mind is that operating expenses only went up, I think, about 1%, which isn't bad. 109% is not good, but 108% to 109% isn't terrible, considering they're really trying to rev up innovation right now.
Yeah, and that's a fair point.
Yeah.
I think one of the reasons Palantir is getting momentum is because it's re-accelerating. I know the comps are really easy, but at the end of the day, it's up and to the right. Whereas if Snowflake is not up and to the right, any stock not up and to the right, that definitely hurts the narrative.
Yeah, man. It's just the way the stock market goes. Like, it's just mostly opportunity cost at this point for a lot of people. It was like, okay, you know what? I've been sitting here waiting on Snowflake. I'm down year to date. I'm gonna put more money in Palantir. Like, I give up. You know, that's usually how it goes. If something's not performing, but that's usually when it performs, when everyone finally gives up.
Okay, so final question for you. Then I know you got to get out of here.
Yeah.
Give me your thoughts on Palantir. What do you think about it after that quarter, at this valuation? How are you thinking? You own it, right? I think you own it.
Yeah, I own it. Like, there's a reason why it's one of the most expensive cloud stocks out there. In fact, I think it is the most expensive cloud stock out there, and it's holding its valuation right now because it's GAAP profitable. They're growing. They're in a market where they pretty much have no competition in public sector and health, and in health, and I think it was just public sectors and health sectors are really outperforming the street right now. So that's where they're focusing on. So Karp is pointing the entire go-to-market team at the right place. Like, he's pointing his gun in the right direction and he's firing on all cylinders. I mean, you got to hand it to the guy. Like, he's doing great, man.
Okay, that's fair. I'm assuming you're not a fan of the valuation, though.
Not really, but I haven't sold any covered calls, and I don't know if I really want to right now because the market is just extremely bullish.
I agree. All right, Sam. Thank you. Sam's Twitter. Let me put it in the chat, guys. You can check him out. Sam, he works in IT. He works in a lot of this cloud infrastructure space, so that's why I wanted to get him on today to talk about this stuff. He does a podcast with Chris, Hidden Edge Pod, that you guys can check out as well on YouTube. And we'll have you on again. Thank you, Sam. Appreciate it.
Thanks a lot, man. Thanks for inviting.
Yeah, have a good one.
Later.
All right, guys, let's get an update on the other earnings we got. We got about 20 minutes, then we'll listen to Snowflake's call. Until then, let's check out some other earnings.
Hi there, John. We're looking at earnings that beat expectations, coming in at $3.43 adjusted per share versus the consensus expectations of $3.28. Revenues coming in just slightly higher than what was expected. $1.53 billion versus the expectation $1.52 billion. The guidance here for the fiscal year, the midpoint just slightly lower than expectations. That it's coming in with revenues. It looks like just slightly off on the midpoint there for the guidance, but the earnings per share guidance for the fiscal year a little bit higher than we're seeing. The stock right now up 0.5%. The company basically is saying that its tech innovation, its integration is badly needed right now as customers are racing to figure out how to play their AI. And that's why they have such resiliency in their business, John.
All right.
So Synopsys, for those that didn't know, because I didn't really know this is a cloud infrastructure company. So another SaaS play. The stock right now, SNPS, they beat on the top and the bottom, $86 billion market cap. Up about 0.5% after hours, nothing too crazy, but looks like they had a good quarter, which is good for overall SaaS because we're seeing more momentum there. And then I think we have Urban Outfitters right now.
From software to chip design, thank you, Contessa, to Urban Outfitters. Those earnings are out. Julia Borston has the numbers. Julia.
Urban Outfitters beating on the top and bottom lines. Earnings per share of $1.24 versus estimates of $1 per share. Revenues also coming in just a hair ahead of expectations at $1.35 billion. But the total, and the reason the stock is pretty much flat right now, down just fractionally, is because the total comp store sales increased just 2% versus the 3% estimated. And we're seeing some disappointment in some of the brands. Urban Outfitters saw a 9% decrease in sales versus the 8% estimated. And if you look at some of these other divisions here, Anthropologie as well as Free People, both growing just about 7% less than anticipated. So slower growth in those brands that were expected to be driving the company, while Urban Outfitters worse than anticipated. Stock is flat right now. John, back over to you.
All right. Yeah, stock flat. And I guess given what it's been doing over the course of the year, that's not so bad, Julia. Thanks. Well, still ahead. Much more.
Okay, never mind. Synopsys is not a cloud company. You guys are saying in the chat it's a chip company. So on the website, it says Synopsys Cloud, but seems like they're a chip design company. I've never heard of this one, dude, like ever. This is a new one that I'm finding out for the first time. 86 billion too. That's a big company, bro. I have not heard about this ever. It's an American electronic design automation company headquartered in California that focuses on silicon design and verification, silicon intellectual property, and software security and quality. They supply tools and services to the semiconductor design and manufacturing industry. Well, hold on. I haven't looked at the stock year to date. If it's a semi play and they help with chip design, let's look at the stock together year to date. So I have not looked at the stock ever. So let's open it up. I'm going to guess 20% year to date. If I'm just going on the blind idea that it's in a semi's name and semis have rallied this year to date, 13%. Okay. So off by about 7% there. At one point, it was at 600 days. So at one point, it was at $20 or 20% in July. And then it came down with everything and slowly recovering from those levels. Okay. So if anyone's in that one didn't look like it had a horrible earnings. Robinhood over 2020 after hours. Yeah, Robinhood is doing well. Bitcoin, are we still pumping on Bitcoin? Bitcoin still 61.2, was 61.8, tried to go for 62,000, now 61.2. Robinhood getting some momentum on that, $20.24 after hours. Palantir after hours down about 0.25%. S&P is up. S&P still green. Nasdaq's green. Snowflake still down 6%, bro. Shout out to Sam coming on the stream, but he didn't really help us understand why it's down. And that's probably because he doesn't know why it's down, outside of the street maybe having way higher expectations for 2025 fiscal year growth, or at least the rate of growth into the product revenue. And it seems like that was not achieved. I'm curious on this earnings call, dude. By the way, last earnings call or two earnings calls ago, they have a CFO named Mike. I forgot about his last name. But that dude, he was just like a dick on the earnings call. Like he was actually like a mean person. And it was so weird why he was being so rude to one of the analysts. Like it was just one of those things where I was just like, and that stock was at like 250 that day or 230. And I was like, bro, this is just like mean. This is just very mean. But like an analyst asked him, hey, can you give us some more guidance on why why the numbers aren't the way it is. And this is how he responded. So we'll see if we get some similar type of analysis from him here. But this was on the Q4 call, how he responded to an analyst.
I think he called out Snowpark at a 70 million annual run rate 1 day back in December. I know that was just sort of like a 1 day statistic, but I'm just trying to think through that. I mean, the guide of 3% of revenue for fiscal 25, that's like 95, 100 million. I guess it just seems kind of conservative, given that Snowpark or that consumption on Snowpark was growing 45% quarter over quarter last quarter. Just how should we think about the level of conservatism on that, assumption within your guidance?
Well, what I'm saying is we're guiding it to be 3% of product revenue this year, and you can infer what you want from the guidance.
It was just like he was a dick, bro. Like it was just like not nice. That was the day Slootman stepped down as well. So it was one of those earnings where it seemed like he just didn't care about answering questions. He wasn't really happy about how the quarter went. I'm curious how they approach this earnings today and how it how it kind of plays out. So we'll see what happens today on this one. I didn't listen to the last one, so this is like the second time we're actually listening to Snowflake since Q4. Okay, the Max 7. Let's talk about them. We got 15 minutes until the Snowflake call starts. The Max 7 have added 1.6 trillion since August 5th. By the way, breaking news, Tesla's launching FSD for Cybertruck in September. This is big news, apparently, for Tesla. There you go. Tesla's launching FSD for Cybertruck in September. I remember on the Morning Open a couple weeks ago, I thought the Cybertruck already had FSD, and you guys had to correct me. I was like, doesn't it already? So I didn't know it didn't have FSD, but that's big. Is Tesla up on that news? I told you guys I'm seeing so many Cybertrucks around my neighborhood. No, it's flat. It's flat on the news, but that'll be good for the Cybertruck and having FSD. But so Max 7 up 1.6 trillion. The S&P 500 has added 3.6 trillion since August 5th. So we have had a pretty strong rally over the past 2 weeks, and we've had some momentum. However, I now want to show you guys something that might be kind of bearish. So this whole day has been bullish. Everything around rate cuts has been bullish. Everything around the Fed minutes have been bullish. Everything about the jobs report, even though that was kind of bearish, has been bullish. Let me show you guys something that when I saw it, even I was like, oh, this looks kind of bearish. I don't know if it'll play out, but here is something that if it does play out would be kind of crazy. So 2007, July 17th, we top on the S&P. We have a 9.5% correction. We have a full recovery. September 18th, we get the first rate cut. Then the market collapses, and then we have the great financial crash. 2024, July 17th, SPX tops, literally the same day. Then we have an 8.6% correction. Some names were down almost 40%. Then we have a full recovery, which is basically today. We are at full recovery on most names, including the S&P. It's a little bit away from all-time highs. September 18th, 2007, we got rate cuts. We're probably going to get a rate cut in 2024 in September. What happens after that? I saw this today, and this was kind of like, it's not really bearish. I don't know how this is going to play out, but if you were a bear that is looking at a very crazy kind of market cycle that we've had over the past couple of years, 2005, 2006 there was a bubble that was forming, right? It was a subprime mortgage bubble, and that's what led to this inevitable bubble burst. I don't think an AI bubble is forming. I think there are some parts of AI that are a bit overvalued, but in no way do I think it's a massive bubble given NVIDIA's growth, AMD's growth, Palantir's growth, etc. But that would be the only way I think we get the same type of collapse that we got in 2007. We would need some level of a bubble to pop. And I don't think it's unemployment. I don't think it's the consumer not being able to spend. I definitely don't think it's earnings growth. It would have to be AI, and I don't think AI is a bubble. So, yeah, exactly. If 2007 was due to the subprime crap, I don't think necessarily that would be exactly the same. But in general, it definitely, those charts looked similar, dude. Those charts looked very similar. And it just felt like it looks the same. Again, I think there's too many things happening in this cycle that kind of go against that bearish narrative. Let's get more of an update on how the S&P and the Max 7 have done, and then we'll keep going from there. We got 10 minutes, and then we get the Snowflake call.
Goldman Sachs takes a pretty comprehensive look at the quarterly mutual fund holdings data to break down where the bets have been laid. And, even though everyone assumes that almost all funds owned a bunch of Magnificent Seven stocks on the way up. In fact, a lot of funds, either by rule of their own firm or by regulation, actually can't own a full complement respective to the index of these stocks. What you see here is different categories of mutual funds and their overweight or underweight of the Mag 7. The most dramatic underweight, of course, is growth funds, right? They're like 14 percentage points underweight in the Mag 7. But guess what? The Mag 7 is 52% of the weighting of the benchmark growth index. So therefore, they still own 38% holdings in these 7 stocks. So is that a lot? Is it a little? Is it enough? Is it not enough? That is a big question. And it shows you, by the way, what the index funds themselves, the massive bets that they have, because they just reflect what's going on. The average right here for all large cap funds is about a 6 or 7% underweight. But again, it still means that they own well more than 20% of the fund in these 7 stocks. And by the way, on the correction that culminated on August 5th, they actually were protected by being underweight those areas. So it is a matter of whether you think these will continue to be the leadership stocks as to whether this is a good thing or a liability.
So, Mike, help me out here. Boiling it down, if I'm playing at home, how concerned should I be about the fact that the funds aren't holding the full complement here?
I would say if you are the type to be overly concerned that these 7 stocks are too big and the market is too concentrated and they're eating the entire index, then you can say, well, I guess actively managed mutual funds are one way around that, because they're going to look elsewhere, either because they're forced to or because they choose to. And so that's not such a bad thing. But I guess, you know, if you feel as if they're hamstrung by their inability to own the full complement, then index funds are right there. They don't cost much.
Sounds like a good on the other hand. Mike, thanks.
Yeah, that's right.
Indexes are heavily concentrated into the Mag 7. The broader market is, we saw NVIDIA's institutional ownership was 64%. Oh, by the way, we got about 9 minutes until the call. We were supposed to do this on Monday, but I didn't get a chance to do this. What tickers do you guys want to see institutional holdings for? Because they all got updated. So give me a ticker in the chat and we'll look at it together. And we'll see what we got. So let me put up the website right here. This is a website for those that don't know, Fintel. Everything's updated after 13Ds, 13Gs. Robinhood right here, 83% is institutional, 635 million shares. There's about 940 million outstanding. And NVIDIA was 64%. The street owns NVIDIA, and they absolutely want NVIDIA to keep gaining more momentum. Snowflake. All right, so let's do Snowflake. And let's see what we have on Snowflake. Snowflake, we have 231 million shares long. I believe that's about 60%. Yeah, just about 60%. Snowflake's there at about 60% institutional ownership. Palantir's still 44%. Yeah, we looked at that on Monday. Palantir's still 44%. It was at 42 in the beginning of the year, so we have seen a little momentum there. Shares long of Rocket Lab is 285 million. That is just under 50%. Let me do the math right here. 285. No, that's above. Yeah, sorry, that's 58%. So Rocket Lab is a 58% institutional flow. Uber. All right, let's look at Uber. Uber, we have 2 billion shares outstanding. That's up 2% quarter over quarter. That is about on shares outstanding. I think that's about 45. No, that's about 65%. Yeah, that's about 65% on Uber as well. Okay, so Uber as well, 65%, which is not bad. CrowdStrike. Let's look at Crowd. I was looking at Crowd the other day. Crowd. Let's see what they have there. CrowdStrike, you have, wow, 83% institutional, 192. This is why people were really upset when CrowdStrike fell, dude. This is a heavily owned institutional stock, 192 million. This is also why the stock is, see, this is why they got into the S&P 500. Look at that, 83%, dude. Like the S&P, I'm not showing it, sorry. The S&P loves this type of number, 80 to 90% institutional. Because then, again, the S&P wants less volatility. That index is not supposed to be volatile. If you've got a meme stock in the S&P 500, it's going to be very volatile, and you just can't have that. So and the thing that stops it from being meme-ish in terms of its behavior is institutional ownership, because usually institutions tend not to sell. They tend to go long, and they sell after long periods of time. Someone said PayPal. Let's look at PayPal. PayPal's institutional ownership is 75% at 772 million shares. That's surprising that PayPal has not pumped more, given how many toots own them. Is Palantir qualified at 44%? Palantir is qualified. The problem is the S&P loves 60 to 80%, but theoretically they could get in, if they wanted to be. Okay, so PayPal's 75%. Let's do Dutch Bros. I actually have never looked at this one. Dutch Bros. Whoa, 93% on the Bros. Holy crap. This stock went down on earnings, right? Bros stock is it was up almost 15% year to date. Now it's up 2% year to date. Yeah, it fell about 14% right here from July into August. But Dutch Bros, that's a lot, dude. I didn't expect 93% ownership. Is there a threshold? 60% tends to be the benchmark. Like, again, if Palantir got into the S&P 500, it would be the second lowest S&P 500 institutional long in the entire market. So that would, the benchmark I would imagine is closer to 60%. MicroStrategy, you've got 10 billion. Well, they just did a split, so this one's going to be a little hard to see. They have 10 billion institutional long shares. Let me see what's the float. I'll have to see if I can find that one. But last time I checked, I think it was 45%, if I'm not wrong. Yeah, it's around 45%, if I'm not wrong. But the split kind of changes that number a little bit. Intel. Let's see Intel. Okay, Intel. This one I think is going to be heavy institutional, but I might be wrong there. Intel is 72%. Yeah, that's what I thought. 3 billion shares, 72%. Amit, it is different if you're already in the S&P and Palantir isn't. Yeah, but again, the reason you get into the S&P is because of the institutional ownership. Let's do a Novix, not because you got, like, when you get into the S&P, yeah, you get a lot more people to buy, but to get in, you have to have people already buying, and CrowdStrike already had huge institutional ownership before they got in. 50% of a Novix is long. That's surprising to me. Novix, by the way, we talked about this the other day. They've had a crappy past couple months, dude. Novix has it was up like 50% at one point, and now it's down from it's at 1050 right here. Year to date, it's wow. Look at that. It was at $18. Now it's down at 14%. Started the year at 12, went all the way down to 6. I know a lot of people that bought at this $6 range, rode it to 18, kind of felt like it was going to 25, and then boom, just got hit right there. But 50%. Also, by the way, Raj Talluri, the founder of Novix, he deleted his Twitter account today. I don't know why, but if anyone knows why, let me know. Because I don't know if that's bullish or not. Maybe he deleted it because he wants to focus on, let's do Target. He wants to focus on the business, but maybe he deleted it also because something else happened and he just doesn't want to be there. Target, 96%, 446 million shares long on Target. That's incredible, dude. Again, Target's operating margins this morning, they put up 6.4. Last quarter was 4.5. The street thought it would be maybe 5.4. 6.4 is a hell of a beat, which is why the stock is up 11% today. So they just had an absolute exceptional quarter. And for anyone else in the market that's not invested in Target, you want them to have a good quarter because that means that the broader consumer hopefully is not in a horrible situation. Okay, we have Snowflake in 2 minutes. So that'll be starting in a bit. Wait, hold on. Is this started right now? Why does it not say it's live? You guys see this?
Thank you for attending today's Q1 fiscal year 2025 Snowflake earnings call. My name is Sierra, and I will be your moderator today.
Hold on. There's no way. It has to be live. Why is it, it says 5 p.m. Eastern, right? Yeah, 5 p.m. ET. It's 4:59. Oh, this had to be, no, this is the last one. Sorry. This is the old one. Oh, they don't have the link for the new one. That's so weird. Why is that happening? Snowflake. I clicked on the recent one. Let me see. Events. Yeah, they gave me the old one. Okay, so here it is. It should be right here. Webcast. Here. Here we go. This is the webcast. Okay. There we go. Got the right link. Okay, now we're waiting. All right, so we got 30 seconds. We got 30 seconds, and we will see AMD. All right, let me do AMD real quick. AMD is 75%, 1.2 billion shares long on AMD. What else did you guys say? AMD is 75%. SoFi is 40. Let me check SoFi. I thought I said that already. SoFi is, I believe it's closer to 45%. 482 million shares long, 45%. 45%. All right, here we go. Let's get into Snowflake and let's see what they have to say. They should be starting pretty soon. Probably in about 15 seconds, and then we'll start. Rocket Lab was 50% or 58%.
Good afternoon. Thank you for attending today.
All right, we're starting.
Fiscal year 2025 earnings call. My name is Cole, and I'll be the moderator for today's call. All lines will be muted during the presentation portion of the call, with an opportunity for questions and answers at the end. I'd now like to pass the call over to Jimmy Sexton, Head of Investor Relations. Please go ahead.
Good afternoon, and thank you for joining us on Snowflake's Q2 fiscal 2025 earnings call. Joining me on the call today is Sridhar Ramaswamy, our Chief Executive Officer, Mike Scarpelli, our Chief Financial Officer, and Christian Kleinerman, our Executive Vice President of Product, who will participate in the Q&A session. During today's call, we will review our financial results for the second quarter fiscal 2025 and discuss our guidance for the third quarter and full year fiscal 2025. During today's call, we will make forward-looking statements, including statements related to our business operations and financial performance. These statements are subject to risks and uncertainties, which could cause them to differ materially from our actual results. Information concerning these risks and uncertainties is available in our earnings press release, our most recent Forms 10-K and 10-Q, and our other SEC reports. All our statements are made as of today based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During today's call, we will also discuss certain non-GAAP financial measures. See our investor presentation for a reconciliation of GAAP to non-GAAP measures and business metric definitions, including adoption. The earnings press release and investor presentation are available on our website at investors.snowflake.com. A replay of today's call will also be posted on the website. With that, I would now like to turn the call over to Sridhar.
Thanks, Jimmy, and hi, everyone. Thanks for joining us today. As you've seen by now, we had another strong quarter, beating guidance and increasing our FY25 product revenue expectations. I'm really proud of the team and how we accelerated our innovation pipeline. And our product delivery momentum continues to be really strong. In the first half of this year alone, we brought as much product to market as we did all of last year. We're making Snowflake the best cloud for computation, collaboration, and applications on all data, and we are leveraging the power of AI to make all of these easier to create, maintain, and use. This is what our team is aligned around, and I can tell you, our customers are adopting our new capabilities at an incredible pace. As I said last quarter, I have three key areas I'm personally focused on: listening to and learning from our customers, fueling innovation and product delivery, driving execution and alignment within our go-to-market teams. And in Q2, we delivered on all fronts, which you can see in our results. Product revenue for the quarter was $829 million, up 30% year over year. Remaining performance obligations totaled $5.2 billion, with year-over-year growth accelerating to 48%. Given the strong quarter, we are increasing our product revenue outlook for the year. Companies like Capital One, NBCU, Petco, Pfizer, Snapchat, and Western Union are all relying on Snowflake to help them fuel their businesses. I'm really encouraged by the strength of our core business and the rapid progress we have made on the AI front. I'm very optimistic about where we are going and the opportunities we have in front of us to deliver for our customers. In fact, the more I'm with our customers, the more I appreciate just how critical we are to their business and how much they're counting on us to be their trusted advisor in their AI data journey. Nothing brings to life how strong and trusted a relationship is than when you go through challenges together. We obviously had some rough headlines in the quarter as some of our customers dealt with a cybersecurity threat. As extensively reported, the issue wasn't on the Snowflake side. After multiple investigations by internal and external cybersecurity experts, we found no evidence that our platform was breached or compromised. However, we understand that when it comes to cybersecurity, we are all in it together. My one ask of all businesses around the world, whether they are a Snowflake customer or not, is to enable and enforce multi-factor authentication in your organization and ensure that you have network policies are as strong as possible. Two things we at Snowflake have supported since 2016. There were a lot of bright spots in the quarter, none more than the time I spent with over 100 customers, many of them on my travels to the UK, Germany, Canada, and across the US. And of course, at Snowflake Summit in June. The affinity for our product is incredible, and the consistent theme I hear from the C-suite across industries and geographies is that Snowflake is delivering ease, efficiency, and reliability to their business. And so much of this came to life at Snowflake Summit. We had 15,000 on-site attendees, up 28% year on year, with customers and partners from around the world. We hosted our first ever Developers Day with over 3,000 attendees. The energy was simply incredible. And if you're there, you experienced a lot of our innovation and product momentum, where we brought to life Cortex AI and announced Iceberg being generally available, both of which have gained a lot of traction already with customers. Fomc Logistics, a leading provider of transportation and warehousing solutions, has developed a variety of innovative use cases involving Cortex AI. In one example, Fomc plans to use Cortex to consume various performance metrics related to its transportation business. Cortex analyses will help provide feedback to Fomc's operations managers with the goal of improving performance and enhancing truck driver retention. Also, one of the largest financial services companies is using Cortex AI to analyze unstructured text data, running sentiment analysis on call center transcripts to improve their customer support experience. Twilio's Segments Reverse ETL integrates with Snowflake's Cortex AI and enables Twilio customers to derive insight from their unstructured data to improve the customer journey. And Iceberg is providing one of the largest consumer services and hospitality companies with a more flexible and interoperable deployment model, enabling them to accelerate their migration to the cloud. Iceberg is enabling us to play offense and address a larger data footprint. Many of our largest customers have indicated they will now leverage Snowflake for more of their workloads as a result of this functionality. More than 400 accounts are using Iceberg as of the end of Q2. I told you last quarter that product delivery is one of our highest priorities. And in Q2, we made nine net new product announcements and brought more than 15 product capabilities to general availability to the market. That's what we call progress. We're also seeing broad adoption of our products across our customer base. As of the end of Q2, more than 2,500 accounts were using Snowflake AI on a weekly basis. We expect this adoption to continue to increase and revenue contribution to follow. Our notebooks offering is also seeing great traction in public preview with more than 1,600 accounts using that feature. This is critical to engage with data scientists and will unlock new opportunities that we previously did not address. We are in the early innings of this opportunity and will continue to bring new features to market. Cortex Search and Cortex Analyst are expected to be generally available in Q3. We are continuing to responsibly invest in AI and machine learning to deliver enterprise AI that is easy, efficient, and most of all, trusted. It's great to have so much momentum on the product front. It's fueling our incredible go-to-market team, which, as you know, is one of our biggest advantages. To wrap things up, our innovation engine and product delivery are in overdrive. The combination of our platform and the network effect of collaboration, as well as the innovation we are working on in AI, is Snowflake's future and create a huge opportunity ahead. We have a lot of work to do, but it's in our hands to deliver and take advantage of it. Mike, I'll turn it over to you.
Thank you, Sridhar. Q2 product revenue grew 30% year over year, totaling $829 million. Financial services and technology verticals drove growth in the quarter. We continue to see signs of a stable optimization environment. Our largest customers are contributing sequential product revenue growth in line with historical patterns. We delivered strong bookings in the quarter. RPO grew 48% year on year to reach more than $5.2 billion. We signed 2 9-figure deals in the quarter. Earlier this year, we announced FY25 sales incentives that would prioritize consumption and new customer acquisitions. In order to drive consumption, sales reps prosecute new use cases and sell new product features. We believe this focus will convert into meaningful revenue over time. Our new customer acquisition motion is ramping. We expect it to have a more material impact in FY26. In Q2, non-GAAP product gross margin of 76% was down slightly year over year. As mentioned on our prior call, we are incurring GPU-related costs in order to fulfill customer demand for our newer product features. Non-GAAP operating margin of 5% exceeded our guidance, benefiting from revenue outperformance. As expected, non-GAAP operating margin is down year on year as a result of R&D and go-to-market investments. Our non-GAAP adjusted free cash flow margin was 8%. We continue to see approximately 80% of our customers paying annually in advance. We ended the quarter with $3.9 billion in cash equivalents, short-term and long-term investments. In Q2, we used $400 million to repurchase 3 million shares. From our original $2 billion repurchase plan, we have $492 million remaining through March 2025. Our board of directors authorized the repurchase of an additional $2.5 billion under our stock repurchase program through March 2027. This allows us to use our cash balance and expected free cash flow to manage dilution over this period. Our share count guidance does not include the impact from the stock repurchase. Now, let's turn to our outlook. We forecast product revenue based on observed behavior. Our FY25 guidance includes contribution from Snowpark, as previously stated. Our guidance does not include material contribution from the newer product features. Our forecast does include revenue headwinds associated with performance improvements. For Q3, we expect product revenue between $850 and $855 million. We are increasing our FY25 product revenue guidance. We now expect full-year product revenue of approximately $3.356 billion, representing 26% year-over-year growth. Turning to margins, for Q3, we expect 3% non-GAAP operating margin. We are maintaining full-year margin guidance. For FY25, we expect approximately 75% non-GAAP product margin, 3% non-GAAP operating margin, and 26% non-GAAP adjusted free cash flow margin. With that, operator, you can now open up the line for questions.
All right, here we go.
Great. If you'd like to queue for a question, you can do so by pressing star 1. And if for any reason you'd like to remove your question, you can press star 2. Again, it is star 1 to join the question queue. Our first question is from Keith Weiss with Morgan Stanley. Your line is now open.
Excellent. Thank you guys for taking the question, and congratulations on a solid quarter. Really good to hear about the optimization starting to normalize. You guys are it seems to be settling into just about like a 30% product revenue growth rate over the past couple of quarters. There was a lot of concerns coming into this quarter about impacts from iceberg tables. There was concerns that accrued during the quarter about the data leakage. That wasn't your fault, but it definitely was a marketing headwind. There was concern about the CrowdStrike cybersecurity incident maybe impacting consumption. Were any of these outsized impacts, were any of these additional impacts on the consumption in the quarter versus what you guys were expecting when you originally gave us the guide?
I would say the cybersecurity incident with Snowflake really had no impact on us at all from a consumption standpoint. And the CrowdStrike outage was minimal. It was a day with a few customers, but nothing of any substance, and it never really impacted us itself. And our production does not rely on Microsoft for that, so we didn't have.
Got it. And then was Iceberg Tables in line with your expectations?
Iceberg Tables is rolling out, as we said. We have about 400 customers that are using it. We haven't seen customers move storage out of Snowflake, but we're seeing a lot of our customers. We mentioned 400 that we know of that are actually using Iceberg with new workloads. They're trying that out, and we're very pleased with the progress we're seeing there. Storage is still running about 11% of our revenue.
Got it. That's super helpful. Thank you, Mike.
Our next question is from Raimo Lenschow with Barclays. Your line is now open.
Perfect. Thank you. Two quick questions. Mike, the gross margins this quarter were better than what a lot of people have modeled. Can you speak to some of the factors for that? And then, Sridhar, for you, around the Iceberg ecosystem, there was a lot of change this quarter with the Tabular acquisition by someone else. What do you see in terms of attracting talent to drive the roadmap forward there? How is your positioning in that Iceberg ecosystem evolving? Thank you.
Yeah, on the margin side, the margins were slightly better than what we had forecast internally, but it doesn't change the guide that we've given 75% for the year. Part of that is we're still waiting in some deployments for GPUs that around the world that we don't have yet that we were anticipating would have come in this quarter. That's really on the margin side, the gross margin side.
And then on the Iceberg side, it's important to understand that the acquisition of Tabular, the company, has no impact on the Iceberg project, which is an Apache open source project. This has contributors and program committee members from a number of cloud companies, the hyperscalers, yes, but also other companies. And we also have members within Snowflake. So we very much intend for this to be an industry standard that we take a pretty significant role in shaping. And so from that perspective, we actually feel that the Tabular acquisition in many ways is a vindication of our strategy to bet on Iceberg, because that was the format that was truly interoperable. Hopefully this is the end of the Betamax wars and everybody centering around the one format that has broad support. And as I said, we will continue to be a key player in this ecosystem to ensure that the format truly serves everybody and moves the industry forward.
Okay, perfect. Thank you. Well done.
Our next question is from Mark Murphy with JP Morgan. Your line is now open.
Yeah, thank you very much. I'll add my congrats. Mike, you mentioned a couple of nine-figure deals in the quarter. I'm curious if those are renewals with expansion, or perhaps if they're related to anything else. For instance, Iceberg Tables unlocking, new business where companies want to tap into some larger data sources that are in an open format, or just whether there's anything else to call out on the nine-figure deals. And I have a quick follow-up.
Those were existing customers. You're never going to see, I never want to say never, but it's highly unlikely you're going to see a nine-figure deal from a net new customer. But those are really as part of the renewal process, but expansion in both of those customers as they're looking to do more. I can't specifically say that Iceberg on either of those that I'm seeing, but they both plan on doing more with Snowflake.
Yeah, I understand. Okay. And then as a follow-up, as we start to think, forward into the next fiscal year. I think we're trying to balance out the large slate of products that recently reached GA that you mentioned, Sridhar, and might start to contribute. Then on the other side of the ledger, potential for any discrete headwinds from hardware and software improvements that you pass along. Storage compression. In the past, you had auto warehouse sizing. Any high-level thoughts on Sridhar on how to pencil that out in terms of new products, ramping, and then on the other side, some of those improvements?
I'll start the answer, and Christian and Mike should chime in. First of all, we obviously can't say anything about next year. It is next year. But wherever possible, where we have indication about how new products are going to perform, we certainly tell you about it. We have given guidance, for example, about what Snowpark is going to do this year. And then similarly, with the AI products, as I said, we are seeing broad adoption, and we expect that it will begin to contribute materially to revenue next year. With respect to performance optimizations, I would say that's more of an ongoing thing. We have talked to you about the things that we have on tap for this year. It is important to understand that these optimizations turn into massive cost savings for our customers and make the core product strong. And that it's really important that our teams continue to do that, because that's what protects our overall base. Christian?
I would just emphasize that our leadership position on price performance continues to be a priority for all of us. And at this point, you've seen several years of us continuing to innovate, but also deliver growth and additional use from our customers.
Thank you.
We have a question from Kirk Materne with Evercore. Your line is now open.
Yeah, thanks. Just two really quick ones. Sridhar, obviously, a lot of your partners and customers at the Summit event talked about the excitement around some of these newer products like Cortex and Snowpark. But one of the refrains was, we just need better roadmaps to understand how to use them. And I think from an industry perspective, it came up a lot too. So I'm kind of curious, where do you think you are in your product or your products so that they can understand the ROI that you.
Hey, Kurt, your line is breaking up and we can't really hear you.
Is that any better?
Getting a really bad echo.
That's not good.
I'll stop here. Thanks.
Damn, dude. They might be moving on to the next guy.
Okay, we'll go to the next
We have a
question.
question
Kurt, if you get a better
from
line,
Kash
call back in.
Rangan with Goldman. Your line is now open.
Hey, thank you, guys. So one for you, Sridhar, one for you, Mike. Sridhar, when you look at the product portfolio, so clearly initiative is to get these services out in quick cadence. I think you pointed out the net new 8 or 9 services. But what are the conversations with customers like when they are discussing these services with you? What is your take on where are we going to be a year out with the consumption profile of an average Snowflake customer, kind of this, I think on average? How do you see that mix changing between the core, if you want to just bluntly call it, warehousing related revenues versus unstructured data, whatever you want to call it, Cortex, AI, and the other emerging buckets? How does that mix change for customers as they start to appreciate the net new products you have coming out? And one for you, Mike. You said that the Salesforce compensation tilt towards consumption is still in its early days, but you also intimated that in fiscal 26, we could start to see the fruit of all this. So help us understand what you mean by that, and what are the KPIs that you'd be internally monitoring to inform you and therefore us that tilt towards getting more consumption within your customers is actually working to your advantage. Thank you so much.
Thank you, Kash. On the product side, I would say that our customers go through a journey, typically starting with a desire to have a really good data platform that gives visibility. they end up adopting different architectures, but often the enterprise's most like pristine, cleaned data, the gold layer, so to say, is the one that's put into Snowflake. And there are lots of customers that have standardized on Snowflake as that key data backplane. Next, usually there is a leaning towards collaboration because all companies exist in the context of an ecosystem. They have partners, they have customers, and collaboration of various kinds, certainly starting with data sharing, becomes the key next thing that they adopt broadly. And you've often heard Christian talk about things like stable edges, which is a metric that we track because it creates value. And it obviously also creates a network effect. Our overall strategy at Snowflake is to make sure that all of the sort of data workloads that a company has is satisfied by Snowflake. And this is where things like data engineering, which you have played a pretty significant role in for a while, has been an investment for us. And this is where things like Iceberg become pretty key because all of a sudden, the universe of data that can be acted upon by Snowflake goes through a large expansion precisely because not all data needs to be ingested into Snowflake before things happen. I would say AI is a little unusual in this front because of obviously the industry excitement around it. But we approach it very much from a viewpoint that I think this was part of the previous question of how do we go about creating utility to our customers. We just don't go in and say, use AI. We talk about, how it can be used to derive much better insights or unstructured information. For example, by using an LLM function for doing data transformation like sentiment detection, and easier access to data, whether it is with a chatbot or text docs, or using something like Analyst to give a business user access to structured data. Those tend to be the follow-on applications. And really, we feel comfortable enough to be able to be investing in these in parallel and driving revenue growth. I would say it's too early to talk about X% for this versus Y% for that. Our goal is to be relevant. And for me, relevance is lots and lots of our customers, thousands of customers using our products and driving meaningful, 9, 10-digit revenue for us.
It's just not inspiring, man. Just not inspiring.
And on Cash, on your question for me on the sales comp changes, what I was meaning by that is, we really bifurcated our sales force into the acquisition reps. And those customers they're landing today, we really have them focused on trying to land the right type of customer that can grow. We think they will have a meaningful impact on revenue next year with those new ones. And then also the new muscle that we've been building in the sales organization where the reps are just being paid on consumption is what is driving them. And it's really the growth within customers' consumption. It's a new muscle for them to learn how to go and find and help forecast new workloads coming online. And that muscle they're developing, we see is going to have a really positive impact in 2026 for us.
Excellent. Thank you so much.
We have a question from Karl Keirstead with UBS. Your line is now open.
Okay, great. Hey, Mike, I'd love to just ask you about usage trends as you closed the July quarter and what assumptions you're embedding in the second half product revenue guide. I think everybody on the line has heard fairly ample evidence from Microsoft all the way down that it's a tough IT spending environment. So I'm just curious, as you set the 3Q and 4Q product revs guide, what you would call out as the key variables or maybe changes in macro-related assumptions that you embedded in that guide. Thank you.
I'll just say, I think the quarter showed from a booking standpoint that it's a normal environment, and we're very pleased with the deals we closed in the quarter. I don't see it any worse. It's not euphoric or anything, but it's very stable customer buying pattern we're seeing. And in terms of consumption trends, obviously we just guided our revenue right now for the quarter. We beat and we raised the full year as well too, and that's seeing the consumption trends up through this week. So we're pleased with that right now with what we're seeing.
Okay, Mike, and then just maybe a follow-up. I know that you've embedded in your guidance the assumption of some degree of runoff of the storage revenues that you just repeated earlier still represent 11% of revs. Is the expected pace of that storage runoff in this new guidance tracking similar to what you embedded 3 months ago, or is it a little bit lighter or a little bit faster?
Yeah, well, what I would say, as I said earlier, we really haven't seen any storage leave Snowflake yet, but that was always forecast to happen in the second half of this year. And we are expecting some of that is going to happen, and that is factored into our guidance.
Again, just not a nice guy, man.
Thank you, Mike.
Just not a nice guy. Not a nice person.
Our next question is from Brent Hill with Jefferies. Your line is now open.
Thanks. Sridhar, can you give us an update on the adoption of Cortex and how you're seeing that trend? And for Mike, just on RPO, it was good to see really good sequential growth and the acceleration of RPO. But the gap between revenue and RPO continues to be one of the highest we've seen. Is there anything that's going on that we should consider there? Is this just similar, consistent patterns you've seen in the past?
It's a big question.
I'll actually answer that first, just while it's on my mind. As we've said before, we have customers that sign long-term contracts. If they have consumed everything under their contract, they have the ability to buy monthly. We have 2 of our top 10 customers right now that can continue to buy through the end of the year, and we're seeing that. So they're in their top 10 customers, and think top 10 customers are roughly in the $50 million to $40 million range. Those aren't reflected in current RPO very much because they're just buying as they go.
Christian here, in the adoption of Cortex, obviously we have a number of product capabilities under that umbrella. Cortex LLMs, which represents the different language models that are available. That one, the adoption is quite strong. Lots of the use cases that Sridhar alluded to on text summarization, text sentiment analysis. That's very strong. But also we introduced at Summit both Cortex Analyst and Cortex Search as a way to enable users across all types of organizations to be able to chat and interrogate their data, whether it's structured or unstructured. Those 2 are in public preview, but the adoption at this stage is quite strong. We have quite a bit of demand for going to general availability. And maybe the last one that I will call out is the Snowflake Copilot. We see a lot of usage on customers getting assistance on how to write better SQL queries, which also drives consumption back into Snowflake. So all up, a strong product suite and interest and adoption across all of them.
Snowflake down 8%. Street does not like that answer. They don't think there's an AI narrative there at all.
We have a question from Brad Zelnick with Deutsche Bank. Your line is now open.
Great. Thanks so much for taking the question. It's really a bigger picture question for Sridhar or maybe Christian. If the world increasingly interacts with data through generative AI and LLMs, how does the role of the data warehouse, as we've known it for decades, evolve from here? And why is Snowflake well positioned to help enterprises bridge these worlds, leveraging mountains of enterprise data to build newer generation AI applications? Thanks.
This is the best question.
I mean, first of all, Snowflake is often at the center of all of the interesting data in companies. Absolutely. We started out as a warehouse, but increasingly we are the data backplane that provides the single unified view. Obviously, this comes from production systems, but also increasingly from multiple connectors we have to, other systems, whether they are, Salesforce or Segment or SAP or any of the other applications that you use. And what we are doing with additional capabilities like machine learning, like AI, is to be able to act on that data to then drive operational systems. Disney, for example, uses Snowflake to do a lot of in-park optimization. And we see a lot of people that bring supply chain data into Snowflake and then optimize within Snowflake. And obviously, there are also partners like Blue Yonder, which is a supply chain company that platform on Snowflake and then provide additional capability to their customers so they can combine the supply chain data with other data that there is. Our bet is really that AI and machine learning are going to go where the data is. Data is going to have a strong gravity. And this is the reason why we are seeing such broad adoption. And by providing easy-to-use products with Cortex AI, for example, any analyst that knows SQL now is able to use language models. You don't need to go buy new systems, set up new things, and things like data transformation, text transformations become as simple as writing like a two-line SQL. It is really this ease of use that makes Snowflake such an amazing platform to be able to do all these value-add applications in addition to the core analytics applications and the data sharing that people have done on Snowflake.
I don't really know if
Thank
that
you
was
very
the
much
best
for that,
answer.
Sridhar. Maybe just a quick one for you, Mike. Am I too optimistic to think that NRR can stabilize here, especially in light of all the new product that you guys are bringing online? Thank you.
You know, as we've said before, I'm not really going to guide NRR. And I said it will over time converge with our revenue. And clearly, we'd like to see NRR stabilize at this level, but we'll see at the end of the quarter. I'm not disappointed with our NRR. Given our revenue growth, I'm happy with it.
Makes sense. Thanks so much, guys.
We'll talk about that answer.
Our next question is from Mike Cikos with Needham Company. Your line is now open.
Great. Thanks for taking the questions here, guys. The first one for Sridhar, and I just wanted to come back to Keith's question at the top of the Q&A. I know we're saying that there wasn't an impact on consumption in the quarter related to the muddled headlines around security, but has Snowflake noticed any change when thinking about the timeline for sales cycles or the demand gen as it relates to some of those headlines that were out there? And then the follow-up for Mike would be, when we look at the reiterated margin guidance that we have today, is there anything to think about? Or was there any delayed spend that's now expected in the back half of the year, just given Snowflake's outperformance on a year-to-date basis through the first half?
On the first one about the muddled security headlines, obviously we make sure that we bring up the topic whether we talk to an existing customer or to a new customer. We point to the security capabilities that we have had, honestly, for close to a decade, and try to ensure that all existing customers, for example, follow best practices. You know, they're simple, like multi-factor authentication, like network policies when it comes to security. And our sales team, as well as I, whenever we have conversations with potential new customers, bring this up front and center. And part of the reason why we are slightly muted about this is like these are the customers that got, the people that got breached, these are our customers, and we want to work closely with them to make sure that they get out of the difficult situation that they are in. And both existing customers and new customers appreciate that spirit of partnership in helping them get through a difficult situations. We have them talk to our CISOs, we have them talk to our security field CTOs, advise them on best practices. So like roughly, I would say that there's not really been any noticeable effect or delay in things like our ability to sign up customers or sign up new customers or get existing customers to deploy new projects. We just need to be more proactive about having the security conversation, and we absolutely do that.
In your question, Mike, on whether there's any delayed spend or not having an impact, there's no delayed spend, but I will tell you is we are looking at accelerating, and it doesn't change our guidance. Our guidance is the same what it was. We are looking at potentially accelerating some of our hiring in the second half of the year, in particular for the sales force in some of the areas where we want, and that's factored into our full year guidance, which is guidance we gave last quarter.
That's great. Thank you. Appreciate the additional color.
Our next question is from Joel Fishbein with Truist. Your line is now open.
Thanks, and congrats on the good execution. Sridhar, you spoke about this hospitality customer using Iceberg. Can you give us some more color about that use case and maybe ROI? And maybe if that use case may be used as an example to attract other customers? Thanks.
Can you repeat the first sentence in your question? What customer?
You talked about a hospitality customer using Iceberg for a specific use case. I was just hoping to get a little bit more detail and color around that, and then maybe if that can be used as an example to attract other customers.
Yeah, I think the general pattern that we saw there and we see in other use case from other customers is the desire to adopt an architecture that is based on open file formats. And usually the adoption starts with a small use case, here's some incremental spend, validate interoperability between engines, and then you can go and deploy a larger scale. And I think that's the pattern that we see.
Okay, thank you.
We have a question from Patrick Colville with Scotiabank. Your line is now open.
All right, thank you so much for taking my question. So mine was for Sridhar. I want to ask about kind of classic data analytics and warehousing. Do you mind just commenting on the pace of migrations, new analytical workloads coming online, query pricing, competition in analytics now versus 6 months ago? Is there anything to call out there?
Yeah, in the core analytics space, we are the best in the world that there is, especially when people consider migrating from complex on-prem systems. We have a professional services team that is exceptionally skilled at it, and a very large ecosystem of partners that have been battle tested with massive migrations. We have done migrations from on-prem workloads that end up saving something like 60% of the of the cost the customer has to bear, and their Snowflake implementations end up being very, very efficient and low maintenance. This is an area that continues to be important for us, and we see migrations from a wide variety of legacy systems. There is also increasing interest in having AI-aided tools. We have a tool called SnowConvert that is used both by our professional services teams, but sometimes also by our customers. Especially in the world of AI, we are investing more into tools like these so that migrations can be faster. I would say these kinds of data migrations from legacy systems remain an important part of both new customer acquisition, but also driving substantial consumption increases in existing customers. Christian, you have a lot of background in this.
Yeah, so maybe the additional color is that some of the systems run the most critical processes in organizations. Typically, they're closing the books on this. So oftentimes, a big portion of the migration cycle is validation and ensuring that the results are correct. And as Sridhar said, we are constantly looking at how to create technology and ways to accelerate the process, but there are some parts of it where the validation and testing is very important to customers.
In your question, Patrick, you specifically were talking about the cost of queries and how that has gone. We don't price on a per query because every customer's queries are different. We do a per credit pricing. You get so much compute. That has remained stable quarter over quarter. Sequentially, it actually grew year over year, 1.3%. But what I can say is the price performance has gotten better quarter over quarter for customers, and that continues to be.
Yeah, and then we have been public about a Snowflake Performance Index, where we take not synthetic benchmarks, but actual customer workloads, and we measure the performance improvement over time, and that's how we give assurance to our customers that the economics are getting better on a regular basis.
Super helpful. And thank you, all three of you, answering that question. I guess I want to ask a quick follow-up. I'll leave it open to whoever wants to answer. It's about the prepared remarks saying, not factoring in benefit from new products and then only minimal benefit in fiscal 25 from Cortex and Snowpark. I think, when could those hockey stick and more materially drive product revenue? Because, your previous answer was that the core is rock solid and very healthy. So what about the new stuff and when that's going to really inflect? Thank you.
The only newer product that is in the 25 guide for the full year is Snowpark, as we said at the beginning of the year. And we said that's going to be about 3% of our revenue, or $100 million, and it's tracking to that nicely. And the newer products are not factored into our guidance until we see more history. I do expect they'll have an impact this year. I don't know yet, but 2026 will have an impact.
Crystal clear. Thank you so much.
Our next question is from Michael Turrin with Wells Fargo. Your line is now open.
Hey, great. Thanks. I appreciate you taking the question. Sridhar, I want to go back to that last point and just ask your perspective. You mentioned innovation as a key focus area. So as we're thinking about those newer product efforts and you're having those initial customer conversations, particularly around Summit, what are the couple of product areas beyond Snowpark that you see the most early demand signals or just customer conversation around?
So, not only have we had customer conversations, but we've also, developed specific cadences that teams are implementing in taking new things to market. So we place a special emphasis on what we call data engineering. Iceberg is definitely a part of it, where Snowflake can be used for different kinds of computation that is distinct from the analytic workloads that we've been running. Christian talked about how a hospitality customer is running Snowflake on Iceberg tables that were not created by us. We very much focus on that. We focus on other things like streaming ingestion. So data engineering is one work stream. Definitely a big focus on AI. We have basically a war room, a top-to-bottom team from engineering to sales that is focused on how we take AI products to market. And we expect our notebooks, for example, to hit GA in a few weeks. And we will be making an effort around making sure that those get into the hands of data scientists so that they can run the most complex machine learning algorithms that they want to run on top of Snowflake. And so we have a pretty methodical approach to how we are taking new products to market, but across the gamut, whether it is AI or machine learning or more sophisticated data engineering operations, including with unstructured data, or things like notebooks appealing to a very different persona, there is broad interest. It's a matter of organizing ourselves to put the right product offering in front of the right customer at the right time.
That's helpful. I also just, in summarizing a lot of the little comments on rest of your guidance, just go back to that point. We initially started the year with, I think it was around 625 basis points of potential impact contemplated from the mix of things you've talked about throughout the calls. Is that still the right zip code for us to think about? And is it fair to assume that you're leaving room for storage to come down from that 11% level in the second half, but you're not seeing that at this point? Is that the right takeaway for us?
Well, the storage, we always planned with Iceberg that was going to be the second half of the year, and we still think there will be an impact to that, and that's factored in. But every year we look at potential headwinds associated with performance improvements and other things. We don't update that on a quarterly basis. and we're not going to try to reconcile back to that. We never have and never will.
He just keeps saying, I can't give you guidance.
That's fair.
And it's just,
Thank you.
it's just the weirdest way to respond to these questions, bro.
Our next question is from Tyler Radke with Citi. Your line is now open.
Yes, thanks for taking the question. It's encouraging to hear that you didn't see any negative impacts from the cyber headlines that hit intra-quarter. I was wondering if you could just sort of talk about some of the offsets, though, to the strong consumption in tech and financial services customers that you saw. The magnitude of the beat was smaller than you saw in Q1, and I know there were some maybe positive trends in Q1 that didn't continue into Q2. But if you could just help us reconcile the magnitude of the smaller beat from Q1 to Q2, that would be great. Thank you.
Tyler, we've always said that we try to manage this business such that a 3 to 5% beat is a good beat, and we were 2.4%. Just as I don't get excited if it comes in at 5, I'm not excited if it's at 2. I just really trying to manage this business for the long term.
What type of answer? What the fuck is
I think what's more important is the fact is the beat or the raise that we're putting through the full year. I think speaks more to what we see in the second half of the year happening now.
Oh my goodness, dude.
Yeah, no, helpful commentary. On cash flow, it I think collections were a bit lighter. I think that could be a function of the go-to-market changes you talked about. The full year cash flow outlook was maintained. Can you just talk about the moving pieces in cash flow? Is there any impact from lower CapEx, just given some of the GPU availability you talked, and are you seeing kind of the billings terms compress more than expected?
No, the billings terms are remaining consistent. As I said, 80% of our customers are annually in advance, and actually Q2 collections were actually pretty much as we planned. Payables were a little bit higher and the timing of payables, but our Q4, remember we have a lot of seasonality in cash flow. Q1 and Q4 are always going to be our strongest free cash flow quarter. And so I'm comfortable keeping the 26% for the year right now.
Great, thank you.
Oh my goodness, dude. We need to end this. This is done. This is ridiculous.
We have a question from Matt Hedberg with RBC. Your line is now open.
Great, thanks, guys. Mike, for you, there was an early question on gross margins. It sounds like you still have some GPUs to procure in the second half, but I'm curious, now that you're kind of thinking through the impact of AI on Snowflake, confidence in sort of the medium term that gross margins have in fact bottomed and that we could start to see an upward trajectory here at some point?
So first of all, when we're talking about procuring GPUs, we don't actually buy GPUs, we rent them. So I just want to clarify that. And we have a lot of demand from customers outside of our major regions in Asia and even certain areas in Europe that want us to have GPUs so they can be using some of our newer products. And unfortunately, some of the cloud vendors are just not available yet. And when I say they want the H100s, the bigger ones, you can get the smaller GPUs. And is this the bottom of margins? I'm never going to say it's the bottom because I don't know what's in the future with new products that could have an impact on the margin. I'm not talking next year, but I feel good about the 75% for the year as we've guided.
Got it. Thanks, Mike. And then, with U.S. Fed being a big quarter for you guys next quarter and sort of, I guess, some of the uncertainty on the U.S. election, have you discounted some U.S. Fed expectations for 3Q? Just kind of curious on sort of how we should think about that vertical going into next quarter.
Well, I will say our federal business is our smallest vertical. And as I said before, it's only upside for us. So there's not a lot of expectations in our numbers at all for federal. And I do expect we'll close some deals this quarter. And by the way, public sector is pretty good worldwide in what we do, but your question was on U.S. federal itself. I do expect some deals, but in terms of impact on revenue, it takes time. That won't be until the future once we close those deals. We do have FedRAMP High now. We're working on some other things as well too. And so I do expect to close some deals this quarter in the U.S. federal space.
Got it. Great call. Thanks, Mike.
Our next question is from Alex Zukin with Wolfe Research. Your line is now open.
Yeah, hey guys, thanks for taking the question. Mike, maybe to the and Sridhar, maybe to the question you got a little bit earlier. Obviously, really great commentary on bookings growth, RPO strength, the raise, being more than double the beat, which is I think the strongest raise in a while for product revenue. But to the point, like it's a little bit surprising to hear kind of technology being a strong vertical for you guys. Can you maybe talk about what you're seeing from the financial services and technology verticals that is maybe different? Is it just the macro, in those areas? Is it use cases? And maybe where it was a little bit on the other side, a little bit weaker, and kind of what you expect there?
I would say on the financial services, we just have some banks that are in the early innings of migrations. Like one of them has grown, I think 400% year over year, and they are going to continue to grow, and that really is driving a lot of that. And on the technology side, we just have a number of other companies that are growing nicely in the tech space for us as well.
And a different consideration, which we actively work on, is the size and quality of the teams that we put to play in the different areas. We have among the best teams in financial services. That's where we were strong to begin with. And we are early pioneers of things like data sharing, where that positive momentum fed on itself. There are other areas like the federal business, for example, where we are still building out a crack team, and that's driving growth. In as much as one likes to think that, it's the macroeconomic differences between sectors, what we can do often ends up influencing how robust the growth is.
Got it. And then maybe just one more. If you think about the competitive landscape, that's kind of been a little bit of a charged topic this year, particularly for investors. What are maybe some of the major misconceptions or misunderstandings that you would say are out there, and how or any changes you observed in the competitive landscape over the course of the quarter or even the first half of the year, or from a pipeline perspective?
I'll start. Christian and Mike should add on. I think I've spent a lot of time on the road. Just this quarter, I've met with over 100 of our biggest customers one-on-one. And the thing that really stands out from an analytic capability, core data capability, data sharing, is that we are bar none. We are the best platform that there is, and our customers absolutely recognize that. And we see more and more of their data workloads move over to Snowflake. That doesn't make the process easy. A migration of a large complex system that's managing the books of a bank so that they can close it every month is nothing to sneeze at. It's a multi-quarter project that has to be done exceptionally carefully. So one thing, that I wouldn't call it a misconception, but the one thing that I would reinforce is the strength that we have in our core capabilities. When it comes to newer things like AI, we've been open about the fact that we were a little behind early last year in terms of how much we were invested in it and the kind of products that it's a rapidly moving field, and the kind of products that we could deploy. But even before my coming, the management team here recognized the opportunity, invested heavily in it, and things like the Neva acquisition, through which I came, were an accelerant to things that were already in place at Snowflake. And I would say the change over the previous quarter is that we can tell our customers, we can tell you with confidence that our AI products are world-class, And honestly, that we are much more reliable than building products off of APIs that you can get elsewhere, because we pay a lot of meticulous attention to how we craft products. And it's that combination of reliability and ease of use that we are turning into a major strength for us in AI as well.
Yeah, one quick last comment on top of what Sridhar said. Our product philosophy on ease of use, smart defaults, how do you make things work easily out of the box? We hear competitively is a strong advantage for us across areas, for analytics, for data engineering, and for AI, and we'll continue to invest with that philosophy in mind.
I promise. Last comment on this, to talk about something very concrete that comes with the Snowflake platform, especially after the incidents of the summer, like CrowdStrike. One of the hot topics has been how we set up replication with Snowflake. This is now a battle-tested operation, and most customers are shocked to find out that you can run a full replica of an important deployment at something like 15% the cost of the original deployment, because the replica is just, is basically keeping up. It's not running any of the workloads that are going on in the main one. It's features like that continue to drive our strength in the core.
I think they're done soon.
Super helpful. Thank you, guys.
Is that it?
We are out of time for questions, so thank you all for your participation. You may now disconnect your line.
All right, that's it, folks. We are done with Snowflake. All right, so let's discuss some good things and bad things from that call and from the earnings itself. I mean, we talked about the earnings numbers itself with Sam, and there were some good things like gross margins potentially bottoming at 76%. Because if those start to go up, I think the street will get more excited. And the $2.5 billion share purchase payment. So those are two things from the numbers themselves. Gross margins bottomed, raised guidance or beat guidance expectations at 22% versus 20% for Q3, and buying back some shares at $2.5 billion. Outside of that, so those were like the three good things I got from the call itself. I mean, you guys heard it as well. This is not just me. About 700 of you also were listening to this call. I just posted this on Twitter. This is the most uninspiring call I have heard in tech. I mean, we've listened to a decent amount of earnings calls. This one was not good. This one was just not good in terms of inspiring confidence. Wall Street said Snowflake at $150 in December 2022 and Palantir at $6. It was obvious who was going to win. Palantir now is at 32. Snowflake's down 18% at 123, down about 9% after hours. Let's see if it bottoms a little bit. It's down at 8.1%. We'll talk about the stock in a bit, but it is down even more. What I posted just now on Twitter is that I think that if there's no excitement, when you speak with Jensen Huang on the big stage, surely you should be able to inspire the investor base to be excited about the future of Snowflake, or new investors like us in the chat who maybe don't have a position. We see something that we get out of the CEO, CFO that inspires us to think that, hey, there's something here. I don't see it. I don't see it at all. And I don't think it's just about the numbers when it comes to investing in a tech company. We're obviously seeing that with Palantir. Palantir, the most expensive name in software. It's expensive not just because of their numbers are reaccelerating, but because CARP makes you care. Shyam Sankar makes you care. The CTO, when you're listening to him, the CEO, when you're listening to him, there's at least a video of like how they have a good microphone. It's not like a microphone from 1990. You feel something. And because you feel something, that it's not rocket science, you buy the stock, right? Like when you feel an emotion, you actually care about investing in the company. I think there were a couple moments during this call where I didn't feel anything. So the first question that I thought was the most important question, which is, what is your go-to-market around AI? I think Jeffries asked this question around, hey, you guys have this data warehouse and it's been going good for you for the past 10 years and like it's worked, and that's kind of, that was SaaS 1.0. Now we're entering into the world of AI. Where do you see that data warehouse using Cortex AI in particular, which is their proprietary AI offering, to give you some unique benefit that A, accelerates revenue, B, and this is the most important part of the question, integrates a customer to be so sticky with Snowflake that even though they're probably not going to leave from the data warehousing solutions product, they're going to upsell into the AI products, which is semantic search, retrieval augmented generation, all of these different things you could implement within your data. I don't think they had a really strong answer to that. I mean, the answer was first. Sridhar started saying, it was kind of a little arrogant. He was like, well, first of all, we have been a leader in data science for the past blah, 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 blah. And I was just like, okay, that's not, if you're going to say it like that, if you're going to puff your chest out, at least be like, really puff your chest out, right? If you're going to half-ass it, then that's not going to sound that exciting. Number two, I don't think he explained a platform approach to AI, at least the way I think of AIP. Like the way I think of AIP from Palantir is it is a layer on top of Foundry, which is the foundational infrastructure of the data analytics of your business. And then there's use cases from AIP on top of that. That goes beyond, chatting with your data. I didn't understand what the broad approach is. And again, as an investor, you don't need to literally know every little specific way you're going to implement AI into customers' business operations, but you need to know at a high level, how are you going to bring the customer on a journey with AI? Why is Palantir powering all of Wendy's supply chain at 6,400 restaurants? Because there is a unique way that Wendy's thinks of their supply chain operations that Palantir can pair their core data within the ontology on top of AIP to then provide some type of value. And at a high level, that makes sense, even if you're not a super integrated person in regards to the tech ecosystem. From this call, for the average person, and I saw a lot of you saying in the chat when he was trying to answer this question, you just couldn't find that answer. Or like you couldn't make sense of that answer. Snowflake right here down about 8%. Again, we'll talk about the stock in a second, but in terms of the earnings call, I couldn't see the vision on the go-to-market in regards to AI in any meaningful capacity. And I didn't understand when, he brought up Disney as an example. And really the example, I still don't get how Disney is using AI in their theme parks to become more efficient. And if there is some massive use case that Disney is using because of Cortex or because of the integration of Cortex and their data lakehouse, then you have to spell that out for me, right? Like you have to really explain why is that so valuable? How do the use cases compound? This is why Dan Ives, I think, is such a good Palantir analyst, because when he talks to these customers and he then goes on these TV shows and talks about why the use cases are compounding, you can easily say as an investor, okay, if these customers are getting use cases and value that are AI oriented on top of the ontology, then if Palantir can just keep scaling that on the top line, along with making their margins more efficient, which is what we're seeing right now, then there you go. They're going to win. I don't see that with Snowflake. And it doesn't help, that Disney has been struggling for the past 2 years at this point. So again, from a broad perspective, data lakehouses, they're not that special. And if you talk to some Palantir employees, including Chad, Palantir can do a lot of the things that Snowflake does, right? It's not some like complicated proprietary moat, but Snowflake's very sticky. They've been there for a long time. Their go-to-market and sales over the past 5 years has been strong. It's just what's next. And why aren't you something of the past? Why aren't you something that's going to be commoditized by the hyperscalers as well, if they choose to commoditize you? Snowflake right here down about 8%. So that's the first part of the call that I just didn't like in regards to AI. I personally did not see massive momentum in terms of what they were explaining. Now, let me be very clear. They might have said something really special about AI and their go-to-market. And they might have said something that I missed that was like very strong in regards to how they're going to transition customers into this AI revolution. But if the layman can't get it, if hundreds of people in the chat don't get it, I don't think it's about being biased here. I think it's about like, hey, the communication is bad. And these are the calls where thousands, tens of thousands of investors or potential investors are listening. The communication can't suck on these calls. This is the one time you get 4 of them a year where you're able to really communicate, because it's not like Sridhar's going on podcasts, and really explaining his story. This is the moment where you got to talk about it. And I don't think we really heard it on this call. Now, the second thing is about the CFO. This CFO needs to go, dude. This CFO is one of the biggest jerks I've seen in my entire life. And look, he's probably an effective CEO in a lot of different ways, but as a public persona, like, get someone else to talk on these calls, dude, because this guy is aggressive. He's mean. Analysts are asking very basic questions about guidance, or can you give us a little bit more color? And he just throws out the coloring book like he's some mean teacher, and a third grader's trying to color, and you throw out the coloring book because they color outside of the lines. Like, it's just very, like, he sounded irritated across every question. He sounded annoyed at every question. He sounded he began his like reading of the press release almost as if he like didn't want to be there. You can just tell in someone's voice. And this is a really easy tell. The intonation and inflection of your voice, that affects the stock price. So the stock is just being traded on how people feel about the company outside of the algorithms. If people don't feel like you even care about the company, why should I care and put my hard-earned dollars into the stock, hoping that it compounds when it sounds like you don't give a shit? And if you don't give a shit, then why should I give a shit? And that's the one thing I don't think anyone can say against Palantir. Even when the stock was at $6, Karp was passionate, right? You know, Karp banging on the table. It was because he knew that, like, hey, they're struggling right now, and he really thinks they're going to overcome this. But he's just annoyed at the moment. But he feels something, right? And the reason he banged on the table was because someone asked him about the government. The government historically CAGR at 30%. It wasn't in 2022, but he knows that government deals are very lumpy, and so he was trying to get that point across. You can, even if it's frustration, you can tell that the guy cares. I don't know if this guy cared. I don't know if this guy was like, watching a movie during the earnings call. I don't know if he doesn't care about the company. I don't even know if this guy talks to Sridhar. I don't know if they have a good relationship. There was just no synergistic energy in regards to the CTO, CEO, and CFO. They were talking over each other. It was really weird in terms of trying to understand what management team am I investing in. Another example here is Robinhood. Jason Warnick and Vlad, they complement each other when they're talking on the call. When Jason adds something, he adds something of value. And Vlad piggybacks off of Jason's question, the CFO and the CEO, they come together and you feel, you don't know if the stock's going to go up or down, but you feel your money is at least being protected by people that give a shit about your investment. And this CFO and CEO just doesn't, they don't sound like they care. Like they genuinely, and you know why? When someone says, hey, can you give us a little bit of more explanation on why this is what this is? And he says, Tyler, like he addressed the analyst by his first name. He's like, Tyler, we don't do that type of stuff. So that's what our answer is. Like, it's just like, what, dude? Like, what? How can you say that? How can you be that like mean to a guy? All the analyst is trying to do is like figure out if he should put a sell rating or a buy rating on your stock. Like, these are not the guys to be aggressive against, especially if they're asking very simple questions at the end of the day. Some of you said they don't have answers. Well, that's a good point. They might not have any real answer. And again, I don't think it should be that hard. Like when Karp is asked about AI, when Karp is asked about LLMs, when Karp is asked about ontologies, there's a very direct answer. I know this because I asked him the same question myself. Like, I told you guys this a bunch of times, but he was like, I think Palantir can be one of the biggest companies in the world without thousands of employees. And I was like, why are you so confident about that? And he said, because the rise of LLMs will help us operationalize ontologies. And I was like, okay, I get it. I understand what you're trying to say. And then he goes further than that in all these different interviews where he talks about what you get value from an LLM. Like it's night and day when you hear him explaining the value of AIP in the context of the ontology, and then a broad bird's eye view on the overall concept of an LLM versus Sridhar struggling to explain why Disney is getting value out of Snowflake's Cortex AI product. And I think that explains why the stock is 40% down year to date. Now, let's talk about the stock. I do not think the numbers necessarily justify 8% down at this point, 40% down year to date, because the numbers are strong SaaS numbers. The problem is a lot of times stocks trade on emotions and not numbers. And I think the emotions here are off. So tomorrow, I think there's two possibilities. I think if it goes up, it's because 8% is oversold after already being down 30% year to date. And a lot of institutional buyers come in and they say, hey, this is too cheap for the growth. Management, even though they're not exciting, they're going to keep, the momentum up. Gross margins have bottomed. They're buying back shares. You can make a bull case for that. And I think maybe tomorrow we stay flat at 125, maybe gap up a little bit back to 130 in anticipation for rate cuts in September. I can also see tomorrow this thing tanks another 10% because everyone has fundamentally lost hope, even though the numbers are good. They don't feel any confidence. Again, the stock was down 6% before earnings or into earnings. The call started, it went down 2%. So the call that's supposed to save some of these issues really hasn't helped it. Bottomed at 123.25, right now at 124.20. I think that narrative is possible as well tomorrow. What's going to happen? I have no clue. We had good macro data today. We kind of got through that macro data. I mean, the 800,000 jobs was not amazing macro data, but it was colder than expected. We've been green basically for the past 2 weeks. I think we're probably due for a little bit of volatility to the downside. Maybe that happens tomorrow. Maybe that happens on Friday and it's a regular market, sell off on Fridays. But I don't know if the macro is going to have that much of an impact in the context of Snowflake at this point. I think tomorrow investors need to decide, are they willing to go long on this company? Is there an AI narrative they care about? Or are they done with this? Do they dump it? And does that help Palantir at the end of the day? Because money starts to leave Snowflake for Palantir. Palantir was up after hours at one point. It's slightly down right now at 32.49. Maybe a lot of people just say, you know what? This is stupid. Like, we just don't see the value to staying here, and they leave. So let's see how it plays out. Again, I do think it's oversold from a technical perspective. Being down 8% after these numbers, I do think it's oversold. I just don't know if the market feels excited about this. The other thing I want to say here is stock-based compensation is disgusting, dude. It is absolutely disgusting on this company. I was looking at a little bit of their SBC. I'm going to go through their numbers more in depth tonight. But a couple things. So over the last 6 months, Snowflake has generated $430 million of adjusted free cash flow. Okay. Stock-based comp is $733 million in the past 6 months, which if we divide that by 2 quarters, that's over $360 million per quarter. Palantir by comparison is at 140. It was 114 2 quarters ago. I think now it's at 140. So basically Palantir is half of Snowflake's SBC per quarter. Palantir has more than half the employees. Basically, I think 60% less the employees of Snowflake. And Palantir's free cash flow is going to be 800 to $1 billion. So Snowflake, even if you double their free cash flow, that would be 862 million. Palantir, if they reach the high end or at least the midpoint of their guidance, they should get closer to 900 million. So they would be $1 million above in free cash flow. And their stock-based comp, if we just annualize, or 140 times 4, that would be 560 million. Snowflake, if we do that times 2, Palantir is spending $1 billion less, $906 million less on stock-based comp. So then this begs the question, why are you paying $1 billion of stock-based comp if the growth is not matching higher than at least 30 to 40%? I mean, they touched 29% this quarter. They guided to 22% next quarter. If you're not growing at 30% and you're doing 1.4 billion in stock-based compensation and you're not profitable, feels like a clusterfuck, dude. It feels like an absolute clusterfuck. And then there's no explanation of where the AI moat is. I mean, the only good positive thing is that, as Jared says, the buybacks will get less expensive. If the stock tanks to 100, they can buy back a lot of stock cheap. And I guess, that's one good point of this. But I don't know. Tomorrow, I'm actually confused, dude. I want to say the street really looks at this and they're just not excited and they dump it tomorrow. But I also want to say it's already down 8%. How much lower does it go tomorrow? So I don't know. Tomorrow, we'll see what happens. But not the best call in the context of Snowflake. So those are my thoughts on Snowflake. I think it makes sense at the end of the day that we all picked Palantir, or at least most of us picked Palantir over this one. There's charisma, there's energy, there's charm with Palantir. With Snowflake, you just don't have any of that. And there would be more if Slootman was there, but Slootman's gone. And I think that has just not helped them over the past couple months as well. All right. That's it for me. Thank you, everybody, for being here throughout the day. We had an emotional day in the morning trying to get these job numbers. We got them. They were bad, but not that bad. The market moved on from it, priced it in. Then we got the Fed FOMC minutes. Those were pretty dovish. Some Fed members were calling for a rate cut in July. Tomorrow, I don't think there's any major... No, we do have jobs data tomorrow. We have unemployment. We have jobless claims tomorrow. So that'll be another thing we have to look at. Let me confirm that. I think that's also at 10 a.m. Hopefully that's not delayed. I still want an answer for why it was delayed because we still don't have an answer for that. Tomorrow is Thursday, August 22nd at 10 a.m. Yeah, we should have some more jobs data. We get existing home sales month over month. 7:30. 7:30, which I believe is 8:30 Eastern. We're going to get initial jobless claims. If that comes in better than expected, like it came in last week, maybe markets try to keep running, but that number will be important as well. Last week, it was way colder than expected. If this week it's colder, 8:30, yeah. 7:30 Central, 8:30 Eastern, then that should also be really good for the markets. All right, that's it for me. Thank you, everybody. We'll see you tomorrow, 8:45 a.m. Bitcoin, real quick. Bitcoin was running right after the bell. Bitcoin right now, 61.3. So it's still up about $2,000, 3.39%. It was at 61.8. We'll see tonight if it can make a run. But Bitcoin right here at 61,000 after the bell. All right. Thank you, everybody. I'll see you guys tomorrow, 8:45 a.m. on the market open. Bye, everyone. Have a good night.